Yes, good morning to all of you. It was a great pleasure having Morningstar building the bridge between Asia and Europe, and now I can say hello from Frankfurt. It's a great pleasure and honor to welcome you all as one of the co-organizers of this conference. Thank you all joining us today to the Future Europe block of this global roundtable. I'm more than honored to be surrounded today by the key sustainability experts, decision makers, and you, the audience. The changing global aspect of sustainability will be our key agenda for the coming years. The sustaining momentum for global virtual exchange has come, and we are very happy to bring the world together. From New Zealand and Australia to Asia, to USA, before of course, to Europe, and at the end at Honduras. I hope that this program will set up standards for our future global exchange and will allow us to stay in touch and write this agenda together as a global agenda. Dear Frank, thank you for this fantastic cooperation setting up this conference together. But I also would like to thank our other partners. I would like to thank OMFIF, Special David Marsh. I would like Deloitte, Special Hans-Jürgen Walter. Astrid from the Union Invest, thank you for supporting us, and Jochen from Morningstars. Without their support, it's very difficult to set up such global conferences. And now it's my pleasure to hand over to you, Frank, and take us through the next session.
Yeah, Nada, thank you very much. And as you rightly said, we just finished the first 3.5 hours block, starting this morning, 8 o'clock Frankfurt time in the Asia Pacific rim. Thanks to all who has contributed and were late listeners in their time zone, and hopefully also could raise and outline the other one or the other question. Having said that, we are now actively taking over here in Europe for the next 3.5 hours before we continue with Americas, North, Middle, and South America, starting at 3 o'clock Frankfurt time. But let me come back to Europe. Europe has obviously done a tremendous job and had to shoulder a gigantic burden around the pandemic. And I have to say, I'm very proud to be a European citizen because they have done very well. The money has been risen from various official institutions in front the European Commission in favor of the Union and the members. And they have started a very fast program to support the unemployment situation in the member states, a so-called SURE program, 100 billion of size, where more than half of it has been already funded. A 200 million euro pan-European guarantee fund for loans to companies through the European Investment Bank in Luxembourg. Another 240 billion pandemic crisis support for member states through the ESM, the European Stability Mechanism in Luxembourg. And shortly, the kickoff in summer of the 750 billion reconstruction fund or recovery fund called Next Generation EU. And guess what? We have the so-called founding father and godfather of this program again with us. I have to say I'm very proud and honored that he took the time, and he is one of the most busiest men at the EU at the moment, as you can imagine, at the Commission. And his name is Gerd Jan Koopman. He's Director General and in charge for budget. And as I said, him and his team, they have done a gigantic job over the past couple of months to help us, the European citizen taxpayers, and everyone who's living here among us and with us. I'd like to pass on to Gerd Jan to give him the chance to refer a little bit to these two programs and what on the side has to be done, and also how Europe is building bridges towards to the rest of the world. I think we have this pleasant situation to be in a sandwich position. This sounds not always great, but in this respect it is great, and we can work out with our partners throughout the world in all the other time zones on that pandemic and the crisis and to the recovery of the world economy, and make our social life a more resilient and safe one. Gert-Jan, I like to pass on and give the word to you. And I'm sure I'm not the only one who's eager to learn more about what's currently cooking and what's coming along the line for summer and beyond. Thanks very much, Gert.
Thank you very much, Frank. Thanks for having me. It's a pleasure and an honor. And I must say that this conference, bridging three time zones, three continents, is really extremely important. And it demonstrates, as you said, that Europe is in the middle. We can call it sandwiched, but I feel that we are center stage, and that is important. I also think that the response which you have set out to the crisis stands in marked contrast with the way Europe responded 10 years ago to the financial crisis, when essentially the response was left to individual member states. Coordination was difficult and it was slow. And this time around, we've learned the lessons. And not only have we managed to coordinate better between member states and the European Union level, but actually the European Union level itself has provided a very important part of the measures to address the crisis. You've already referred to them, and I will elaborate more on them. I think that is really of crucial importance for listeners, because it shows that member states want the European Union to help address these issues where it has clear value added. Clear value added, of course, comes from the fact that 19 members are part of the euro area, that within that euro area, it is essential that there is more coordination, that we avoid divergences which could spill over and damage the internal market. So we have robustly chosen to step forward and provide a robust response. Now, what I think is important for this conference as well is that this response is not just meant to shore up the economy in the short run, but it is an investment response consistent with our longer run strategic objectives in Europe. And the two which I would like to highlight here are inclusiveness and our social model on the one hand, and obviously also our green credentials, the fight against climate change, where Europe has been a world leader from the start. And we certainly take that extremely seriously. So our policy response is emphasizing measures and investments that are addressing these concerns. And actually, it is only natural that our financing, for which I'm responsible, reflects this social and green dimension as well, and therefore fits very naturally into the ESG logic that this conference is addressing. So sustainable finance for Europe is not just a convenient way of acceding to the capital markets. It's actually in the DNA of the policy making. So I would like to zoom in now on the two programs that are very emblematic in this regard and that demonstrate this very practically. The SURE program, aimed at raising 100 billion euros of support for member states to shore up short-time work schemes, and the critical Next Generation EU program that comes this summer, which has an envelope of 750 billion euros to support the recovery going forward. Now, SURE marked, I think, the move of the European Commission and the EU as being a relatively small player on the capital markets to becoming a serious SSA issuer. 100 billion euros is twice the amount on our books prior to the crisis. And the first issuance of this bond was tremendously oversubscribed. As you know, it was the largest ever social bond issued globally. And since then, I'm very pleased to note that there has been a very strong interest in this attractively priced social bond that plays, I think, an important role in the social markets in Europe, the social financial markets in Europe. We have so far been to the market 4 times and have already raised 53.5 billion euros, with the last transaction taking place in January. We'll shortly go to the market again. We're very much on track to satisfy all demands that are out there, and we are pushing this program to reach its size, its full size, by the summer of this year, possibly with a little bit of additional borrowing next year after the start of next EU. Now, I think that it is very encouraging to see how the markets consider our bonds as being very comparable to core sovereign, and our pricing over time has been converging to that of AAA rated member states. That we've been able to pass on these attractive financing conditions to our member states. 15 member states so far have been receiving funding under SURE, and the financial interest rate advantage that we're offering them through this so far amounts to 5 billion euros, so that is definitely very significant. I think the high interest was to a large extent due also to the social bond label. The proceeds have been used exclusively for social purposes, in full compliance with our social bond standard. As you know, SURE is underpinned by a social bond framework that is fully compliant with the principles established by the International Capital Market Association. The framework was independently evaluated by an external evaluator, and we will be reporting shortly on the first results of the SURE issuance, both in terms of volumes raised, member states served, programs supported, workers supported, so some first impact reporting as well. So all in all, I think we are very satisfied with the choice of the social bond. I think that has been extremely helpful. And I must also say that it has been a very good test run for the bigger issuance that is now coming under Next Generation EU, the Union's principal recovery instrument. We've built effectively an EU curve with maturities ranging from 5 to 30 years, and that will benefit the Union, and it will help us put forward Next Generation EU. So with that, I turn on to Next Generation EU. I think you're all familiar with it. It is a program that is exclusively financed through capital market borrowing. Its principal beneficiary is the Recovery and Resilience Facility, which provides support to member states, both grants and loans, in return for ambitious national recovery plans, which need to be compliant with the economic advice and address the key challenges member states are facing to get their economies out of the hole, but also in this process addressing structural needs. Member states have until April to submit plans. Commission will be analyzing these plans. Member states through the Council will be deciding, authorizing these plans, and then as all the legal procedures have been cleared, we expect to be able to actually start the borrowing and the disbursements from June onwards. It's a huge package, 750 billion euros in 2018 prices, 800 billion euros in current prices, running over a period of 6 years, very front-loaded, which means that we will be raising between 150 and 200 billion euros a year over that period, which effectively makes the European Commission one of the biggest issuers in euros at par with the largest sovereigns in the Union. Now, given this transformation, the volumes, the frequency, and the complexity of the borrowing, the Commission will actually put forward a debt management policy that is on a par as well with the most developed and advanced debt management policies of our member states. So we're building a diversified funding strategy which effectively decouples the lending side and the investment side of our operations from the borrowing side of the operations, giving us more flexibility and making sure that we can operate in an effective manner, cost-effective and predictable, using a wide range of funding instruments and maturities. So we used to rely exclusively on syndication. Now we'll also be issuing through auctions. We will enter the short end of the market, so we'll also have T-bills, as a result of which we'll have a yield curve stretching from the very short end of the market all the way up to 30 years. It's important to realize that this is the only way in which we can be a five-star operator that is capable of combining the need for predictability and robustness in the markets with the need to service the programs, principally the Recovery and Resilience Facility, that benefit from this financing. So we're taking a very big step. We've built the organization largely to date. Siegfried Rühl, who'll speak in the panel after me, is one of the lead architects. We're very grateful that he has come across from the ESM to help us with this. But we've been able to recruit from the market, from member states, an excellent team, I would say an alpha team, to put this forward. Now, 37% of the money that member states will receive under their recovery and resilience programs will need to address climate change, and it will need to be documented and proved and tested. So that is why 30% of our borrowing will actually be issued as green bonds. It's more than logical. It's consistent, as I've said, with our strategic policies, and therefore we believe that we can give the ESG market a real boost by taking that as an important part of our funding strategy as well. Now, that of course also means that we have to be fully consistent with all the requirements of a modern cutting-edge green bond framework, and that comes with big responsibilities. Let me say that we have already taken important first steps to deliver on that. We've tried to integrate elements from the EU taxonomy in the rules of the Recovery and Resilience Facility, so member states will have to comply with that. And these are demanding features, as you know, so that the reporting on this will demonstrate that the measures we're financing are genuinely green. So the Green Bonds Framework de facto will be a first very important step towards actually using the taxonomy in Europe at a scale that is much larger than considered a few years ago. As I said, we are now planning to be able to go to the market from the 1st of June onwards to finance the recovery. If we indeed manage to issue the volumes identified to date, 30% of 800 billion euros in current prices, then we will be one of the biggest green bond issuers on the market worldwide. And we will, I believe, in the sovereign space, set a very good example for issuers who come after us. Now, I think that shows really very much how we in the European Commission see this funding instrument. It's not just a technical funding instrument to pay for policies. It's actually very consistent with the policies themselves. It will help build and strengthen the ESG capital markets in Europe. It will create a yield curve running all the way from short-dated bills to 30-year bonds, which will help integrate capital markets in Europe, probably one of the most important mechanisms that we could put forward, very concrete. And in doing so, we also are confident that it will bolster the international role of the euro and demonstrate the cohesiveness and robustness of the euro area as well. So these are big challenges we're facing, big objectives to pursue, but we are well equipped, well advanced, and I am confident that we will be able to hit the ground running, working with markets, working with other institutions and our member states. So with that, Frank, let me conclude. There's a lot to play for going forward, and there's a lot to be achieved in the interest of European citizens and businesses. Thank you very much.
Gerd-Jan, thank you very much. It was, like always, a very informative and great speech and information passed on to our listeners. I have to say, that sounds to me so professional that Europe is on its way, or probably it has already started, thanks to you and your colleagues, to become a serious alternative to the US dollar and the treasury activities here. You mentioned the two programs. What is different to what we see from the US Treasury? You have started and immediately became the largest global public institution in issuing social bonds. You, as you rightly mentioned, will become one of the largest green bond issuers. And I can just estimate what will follow on the SDG front in general. Yes. So that sounds to me very innovative, but also the new normal, what our investors and friends in the financial markets need, not just in capital markets, also in the real economy, where the money should go through to build a better tomorrow. And this is a lesson what we should learn out of these COVID-19 pandemic and its crisis, that we build a better sustainable tomorrow. And we encouraged out of Europe with your help in the front, and can encourage our friends in the other time zones. And it looks like with a new President Biden, there is a serious ongoing policy also followed by the US and I guess its neighbors. But we will hear more of that this afternoon. Again, a great thanks to you, Gerd-Jan. And you rightly mentioned Siegfried Ruhl. Siegfried is also a very well-known person in capital markets, and as I heard last year, that he will join the EU and will help to build these new house and these gigantic player. I was very convinced that this will go through and under the most professional environment what we can imagine. As a European taxpayer, I have to say I'm also proud that you stick to our currency and don't do any experiments with other third currencies like the US dollar. That also shows a clear commitment. You also, Gerd-Jan, mentioned that a kind of a DMO structure. And I'm not a politician, I don't belong to any party, but I can say so as a European taxpayer. I hope that this will be the future, because I would say for most of your members of the EU, it is a cheaper way to fund themselves. Surely the conditions has to be clear, and I count on you guys that you will make the right conditions on that. And so I'm looking forward for all what's coming along the line. And again, thank you and your colleagues for these all ongoing activities, and big thanks to you. And I hope that we can count on you on one of our upcoming conferences close to the summertime. But let me now also hand over to the next panel. I have the pleasure to announce that the moderator is not just an old friend and colleague I knew for almost 25 years. His name is John Orchard. John became CEO of the OMFIF organization by January of 1st, 2020, so pretty much close to when the pandemic started, and in such an important role to take over and bring OMFIF to the next stage of evolution. I think he and his colleagues at OMFIF have done a tremendous job. Meanwhile, they founded the SPI Institute, which stays for all shadows and positive outlines in the SDG world. They have founded also in late summer the Digital Institute, and that means OMFIF is the platform ahead the curve to bring public and private sector together. And I'm also very proud if I see to the contributor to that panels, also many people I know from for very long, Tim Armbruster from KfW, Ayla Cravey from the EIB, William Little, BNG, Siegfried Ruhl, surely, we have just talked about him beforehand, and Governor Wenzel, and a very old friend of mine as well. I'm very much looking forward, and I'd like to hand over to you, John. I know we have 1 minute break to go into the another room. Hopefully all our customers and listeners are enjoying this panel, and feel free to raise and ask questions. Looking forward to that. Thank you very much and see you later.
Thank you, Frank, for that wonderful introduction. Very gracious of you. I'd like also to thank you for galvanizing us to put this extraordinary event together, which I think has got off to a wonderful start, and it's great to integrate all the key regions of the world. So chapeau to you, Frank. Thank you very much indeed. Extraordinary also to hear just now from Gert-Jan Koopman describing what sounded to me like a very heavy-duty DMO, new in town, also at the same time, it sounds to me, solving one of the very difficult issues that we've talked about in green bonds for 10 years on taxonomy. If the 800 billion or 30% of that is going to be issued against the EU taxonomy, if that doesn't get the green bond market mainstream, nothing will. So great to hear about that, and we'll explore the EU issuance and the other SSA issuers operating in Europe in just a moment. So welcome everyone. Thank you for joining this session on implementing Europe's Green New Deal. We've got a first-class suite of European financial institutions to talk it through with, as Frank just mentioned, and I'll introduce those in just a moment. We're going to focus on the capital market side in a rather practical way, rather than the policy side in this session, and indeed the one after that with Marcus Pratch. As David Marsh, the OMFIF chairman, pointed out at the beginning, nothing can really work without capital markets. We saw earlier from Morningstar that ESG investing is now experiencing exponential growth, and we're going to talk here and now to some of the issuers of those assets at a time when, as you've just heard, Europe is going to borrow and invest on an unprecedented scale, with 30% of next gen going to green. I've got plenty of questions for our panel, but if you as an audience member would like to put one, please do email me at john.orchard@omfif.org, and the organizers will put that email up throughout the panel as well. And if you could put DZ in the subject line for me, I will try to put your question to the panel where appropriate. So straight on to introduce our panelists, plenty to talk about today. We have with us Tim Armbruster, Treasurer of the Kreditanstalt für Wiederaufbau, the German Development Bank, KfW for short, based in Frankfurt. We have Ayla Cravey, Head of Capital Markets at the European Investment Bank, or EIB, in Luxembourg. We've got Willem Little, Senior Manager, Capital Markets and Investor Relations at Bank Nederlands Gemeente, BNG, similar to KfW, based in The Hague. And we are lucky, as Frank mentioned, to have Siegfried Ruhl, Councillor to the Director General. We just heard from him at the European Commission. He's based in Luxembourg, and he's been seconded to this role from the ESM, which he's been involved in for a decade, including issuing the bonds for the predecessor organization EFSF, while he was still at the German Finanzagentur. And we have Dr. Rolf Wenzel, Governor of the Council of Europe Development Bank, based in Paris, where he has performed that role since 2011. Welcome, everyone, and thank you for joining me. We've heard just now the extraordinary scale of borrowing that Europe is going to undertake. It's already meeting enthusiasm, as we've just heard from investors, with the SURE bonds already heavily oversubscribed. I'd like to explore how that program will interact with your own programs, if at all, on both the asset side and on the issuance side, and to what extent the programs will be coordinated. There's a huge amount of lending and borrowing that's going to take place, and one wonders how it will be coordinated and how it will interact. So, Isla, perhaps I can start with you there. We've already mentioned the special programs of the EIB. To what extent will they run alongside and be coordinated with the EU borrowing and lending? Over to you, Isla.
Yeah, thank you, John, and thank you very much for the invitation to this panel, and hello to everybody else. Yes, I think that we take it between the institutions in a sort of informal way. So we coordinate in the sense that we sometimes we talk directly to each other, or we let the banks do that work. But at EIB, for example, we don't have a calendar, so we are not fitting in our issuance in that manner. But we try to see when there is a window that we don't coincide with similar kind of maturities exactly at the same time. And it's not totally unprecedented that the market is so busy, because now I think the volumes of issuance are less of a problem, especially with all the central bank support programs going on. It's more about the issuance windows. And so far it has been fine. But for example, back in 2008, when the governments all of a sudden overnight decided to guarantee all the banks, then overnight everybody was AAA all of a sudden. So it was busy times back then as well. And now, of course, it's not only us and on this panel and the EC, it's also governments are borrowing more, or everybody else is borrowing more, especially in the public. But so yes, there is coordination, but I think so far it has been fine. I don't think that anybody has been particularly felt sort of walked over or passed aside, but we try to do it in an informal manner, because it's, at least in EIB, since we are not a budget type lender, we are an on lender, and we have a balance sheet to manage, and the lending is not quite as foreseeable as for example in the budget environment. We need to keep this nimbleness and this sort of reacting on a quick notice when we decide to do something and when not. So we need that flexibility, at least on our side. But I think so far things have been rolling pretty well. Thanks. Okay,
thanks, Ida. And of course, Siegfried to some extent is in walking distance if you need to talk to him. Tim, KfW borrows something like 70 billion euros a year. There were concerns at the beginning of the huge amount of borrowing that governments had to do at the beginning of the COVID crisis, that European SSAs might bump into one another, especially as the EU itself starts to become a major issue in its own right. But that doesn't seem to have happened, actually. How are you finding issuance alongside many other high-rated European sovereign or sovereign-like issuers?
Yeah, first of all, thank you for having me here, and of course also warm welcome from my side. And there's a lot where I can echo what Ella has said. I think we have absolutely an ongoing dialogue between all the different institutions on the various level. I think we have with each other a good understanding about what are our needs on the asset, but of course also on the funding side. And of course, the euro is also our home market for KfW. If you look back, last year we funded 60% of our funding needs in the euro. But important is also that you look a little bit about the strength of the individual institution, and we very flexible also in the way as we are clearly a euro issue, but also a dollar issue. Of course, we take also this opportunity here to raise liquidity into the dollar market. That's why we have a broad investor base, and we take, of course, advantage for this flexibility. And this is also something where we also have the possibility to take a little bit pressure out of the whole issuance activities into the euro sector, if the market is, of course, there. Yeah?
Okay, thanks. Is it the same for you, Willem? It's a much busier SSA market in euros than it was. So far, investors seem to be willing to go along with that. How are you finding your markets and your financing?
Echo Ayla and Tim. We are much smaller than those two institutions in terms of funding volume. We are around 15 billion, so that makes a difference. We don't have a calendar either. We are managing our capital markets activities, and we are managing our ALM. We have a portfolio of 80 billion, 85 billion public sector assets, which we have to refinance. We have to be nimble, and we have to be flexible to maneuver between the others. In terms of coordination, same story here. I mean, if we know that, for example, our neighbors from KfW will come to the market, you try not to interfere with each other. It is not in the favor of nobody to interfere. And of course, what Ayla also says, we have the banks who can coordinate and do that in a right way. And the market is very, very transparent. We know exactly what's going on as an issuer. So if necessary, we can give each other a call. And of course, there's some more formal coordination, but that goes mainly through the ISCMA, ICMA, where we have many working groups where issuers are participating on various levels. For example, also the Green Bond Principle. So in terms of I think in general, the addition of the EU to our group is even more strengthening the SSA market in general than that it will be a challenge or so. It's really great to have this issuer on board, and it makes the Euro bloc even more stronger than it was already.
Okay, thanks. So I think you're saying that intermediary banks and bankers like Frank Scheide can somewhat handle the coordination on your behalf. I think that's an interesting and useful point. Governor Wenzel, you don't borrow on the scale of KfW, but you've just done a successful bond. So clearly you're not getting crowded out at the moment.
No, thank you, John, and thank you for having me. Speaking as almost the last but one, I can only echo what colleagues already mentioned. First, we see a much higher supply from the EU. On the other hand, we see a growing demand from investors. So there's enough space for all of us, I believe. And we are very specialized with lower volumes. We have a good reputation in the markets. We are acknowledged and known by investors who are interested in social bonds, social and green bonds. And yes, we saw that last year when we went to the markets early April, at a time when many told us, hey, be careful, it's still COVID. We went into lockdown just 4 weeks ago. You want to go back to the market? And we said, yeah, we would like, because we have a good product. And we see that there's a growing investor interest and demand for our kind of bonds. And we were right. And thank you for the investors banks that were on our side and helped us. And then we went again in June to the markets. And then we were not the only ones, of course. At that time, the markets had already calmed down a little bit. The things turned out to be clearer. And yes, we are happy to see the EU Commission now coming, because it will help create and sort of mature the market even more. So we are not the only ones, not the pioneer, not the icebreaker, if you like. We started with our social inclusion bond in 2017. At that time, we were a little bit afraid and concerned about the pricing issues. And do we have to make special efforts to find the right investors? Anything that helps grow and mature this market is welcome from our point of view. And in particular, since our size is much lower than we look at the EU or even EIB, KfW also. So we can pick and choose the timing and the currency. And we have, however, and that is our big advantage, the right product for investors who are looking for ESG or social or sustainability bonds.
Okay, thank you, Governor Wenzel. Siegfried, sounds like at the moment there is still room for everyone. We know, we haven't talked about QE, but QE, of course, plays a role in demand for sovereigns, as we know. Maybe that won't be with us forever. But at the moment, are you relaxed that you, as a mammoth borrower now, can work alongside these other SSA credits in Europe without overshadowing them unduly? What are your thoughts on that?
Well, I'm very much convinced that this will work well, as Willem mentioned and Tim. The increased activity of the European Union, we also already saw it with the SURE program, makes the European capital market more attractive for investors. It attracts a demand, and well, it's the usual standard sentence from bankers: supply creates demand. It's a bit cheap maybe, but it's also, there is some truth, yeah. So I'm very much convinced that this will work very well. For the European Commission, and Jan described what we have in mind and what are our needs. There are up to 800 billion to be raised over the next 5.5 years, means just as a mathematical average 150, 160 per year. If you assume that you have around 10 months a year where you can be active, excluding August and December, it means 15 billion on average per month. We have to act a bit differently than a standard SSA issuer in the market. These numbers are more comparable to what we are used to see from the large European sovereigns. So we have to act a bit more strategic. We have to give more guidance to the investors when we will be active, what we want to do. So here, the way we act will be a bit different than a typical SSA issuer, but there will be room for both, and there will be demand for all of us. And finally, we all somehow work with the same objective. We want to strengthen the European capital market. We want to overcome the crisis. We want to develop Europe further. We want to strengthen the role of the euro. So I'm quite confident we will have a good cooperation.
Thanks, Siegfried. We'll explore your yield curve in a little bit more detail in a little while. We've heard it's going from money markets out to 30 years, I think we heard. And there's lots more to say about that. We know in March last year, a little bit after that, there were difficult times in markets. The Finanzagentur in Germany was worried enough to create something like 200 billion buffer funds that they can draw on if markets are unduly dislocated. Are you worried, Siegfried, that might reoccur? Where we seem to have a very, very good functioning markets at the moment with plenty of demand, particularly for ESG assets, but we did see markets not working properly last March, also for very high-grade sovereigns like the US Treasury.
Well, because of my history, I'm somehow used to work in difficult markets and to execute difficult transactions. We will, of course, from time to time have more challenging market environments, and we can't take the situation we saw over the last 4, 5, 6 months with 10 times oversubscribed order books. We can't take this for granted, and this is not the normal situation. It's important that we as issuers are prepared to deal with changing market environments. And this is exactly what we plan for the NGEU with our regular presence on all parts of the curve, by adding a bill program that we have flexibility to manage different market situations, shifting demand from one point of the curve to the other one. So this is our role as funding officials to structure our funding program in a way that it gives us the flexibility to raise the money to ensure that the liquidity is there, even if market conditions are a bit more challenging and change over time.
Okay, all right. So in other words, you're not being complacent. I think we can summarize that as saying. I want to spend a little bit of time before we go back to the capital markets and funding markets. I want to spend a little bit of time on the asset side and ask a question I've heard elsewhere, which is whether actually there are enough assets to go around that will qualify. We heard from Mr. Korkman that there'll be strict criteria to make sure that the green criteria are carefully met. But I want to see if we think that there's enough room for assets both from the EU itself as well as institutions like the EIB, KfW and so forth. Ida, you've disappeared for now, so I want to ask you that. But Tim, let's go to you first on that. Do you think there are enough specifically green assets in this case to be covered by this huge amount of available finance?
It's a good question first. And I think finally, I think it's really difficult to say. I think we have also to see how the market and of course also regulation develops. But I'm confident, I'm positive, as of course we all know that the climate change is one of the biggest change what we have. And if I look at, as example now on our balance sheet, and KfW is one of the largest players in green financing. So if you look in our balance sheet last year, how much lending we did, and I exclude the COVID-19 programs, then 50% of our lending was due to green financing. So, but on the other side, if you look at our funding activities, green bonds make around 10 to 15% of our overall funding activities. So there is a certain gap. So there's definitely more what we could do. And if I subtracted a little bit more also into other institutions, maybe we see also here the possibility. And like I said, I think there's definitely the need and the demand for that in the future.
Okay. Siegfried, there are hundreds of billions of euros going to green assets from the EU. Where's it all going to go?
Well, all money which is made available via NGEU to member states will fund additional expenses. So it's not about existing green assets which are available. It's about additional expenses of our member states within this NGEU package. They have to provide their recovery and resilience plan, and it's part of the terms and conditions that 37% of these expenditures must be used for climate purposes. So when we now say that 30% of the upcoming NGEU supply will be done via green bonds, we already included a buffer to really ensure that we have sufficient eligible expenditures which are for sure sufficiently green. I mean, we will become one of the largest green bond issuers in the world with this up to 240 billion in green bonds. And we are aware of our responsibility here for the green bond market. So greenwashing or anything else is not an option for us. This must be credible, what we are doing here. So we built in this buffer of a few percentage points to ensure that the green bonds issued by the EU have really green underlying expenditures. All this will be covered by a green bond framework, of course, including a second party opinion, so what could be called the golden standard in the market, because it's an objective now to use capital markets, which were 10 years ago, you mentioned at the beginning, part of the problem we had. Now we use the capital markets as a solution not only to deal with the current COVID-19 crisis, but as a solution to transform Europe, to make Europe ready for the future, make it greener, more digital, and more resilient.
Okay, thank you. Willem, could you give us a little flavour? Siegfried has said that he's confident there's sufficient demand on the asset side. Tell us a little bit about what's going on there at BNG. What kind of demand do you have on the asset side for green finance?
Sorry. Yeah, well, as a bank, we are not a development bank. We are a public sector institution. So that's maybe first to explain. We are active in various parts of the public sector in the Netherlands. And as we're talking about social or in general ESG assets, there are a number of sectors we are covering. The first of all is that social housing sector in the Netherlands, that we have to build and renovate existing dwellings. there is a green agenda in the Netherlands, which means that in 2050 all houses need to be energy neutral. That means that also the renovation of dwellings needs to be going into an energy neutral way. Energy transition in the sector is very important, of course, because also we committed ourselves on a governmental level that we will not use any natural gas in 2050 anymore, but go to alternative energy sources, well, wind, solar, but also excess, for example, excess energy from the heavy industry to use that for the heating of social housing. These are really large projects. Assisting municipalities with their social and environmental challenges. Social at the moment, of course, very mainly COVID driven, but still there's a lot to be done. And for the rest, we're talking about the greening of school buildings, universities, hospitals. There's a lot to be done. So in terms of assets, I think, I mean, there's a lot of assets available, and as a sector, we are committed to promote and finance sustainable projects in any form, green, social, sustainability, and ESG. So in a way, it's maybe better to ask ourselves whether we are able to stimulate this market and to finance this market than to look at what's available now.
Would you agree then that the pull is as strong as the push in terms of demand for green assets? Yeah. Okay.
Yeah, I think so. I think so.
Yeah. Okay, good. Governor Wenzel, just give us a little flavour for what you have on the asset side. What's the demand for lending in this area that you refinance?
Well, first of all, thank you, and I can only join Willem because we have also a public mandate. Our shareholders want us to do more and to become greener, and also to include in our project that we finance. Projects have to have a social value because after all, we are a social development bank, but we need to include not only internally in our climate change risk management issues, but also when we finance projects. And again, it's the same kind of project that Willem mentioned, social housing, for example. It has not only to be social by giving access only to low-income families, for example, but it also has to be green. There certain criteria have to be met. We are not a national, we are a European institution. We are much larger than the EU in terms of membership, EIB, sorry, in terms of membership. We have 42 member countries. And of course, the acceptance varies from country to country a little bit. When you look at the larger countries, EU member states, they accept and they push us very hard to become greener, to include more criteria in our lending criteria related to social and green. But other countries are a little bit more reluctant. They need to be pushed a little bit more. But in the end, it's a call of the shareholders, and we hear that call very strongly, and we reply to that. As I said earlier, we have been doing that for quite a number of years now. So we are gradually moving up with our lending, becoming greener and greener. But we are, first of all, a social development bank. And to convince those member countries who are not yet ready to embrace the standards that we apply for being able to call a project green, here we establish a green social investment fund funded by profits of the bank to give them financial incentives to have a project that is not only social, but also meets standards for green. And then the question is, do we have these standards already? That leads back to the EU taxonomy. So in a nutshell, yes, we see that demand growing, but not in all parts of Europe yet.
Okay, thanks, Governor Wenzel. I might summarize that as push is slightly stronger than pull in your case at the moment, perhaps, if you think that's fair. Ina, welcome back. We're just talking about the asset side for a moment. The EIB, of course, is a huge sustainable lender. Tell us about demand for sustainable, particularly green assets at the EIB, and whether they're and where they lie in terms of push and pull. As you're keen to incentivize people to borrow in that way, but is there sufficient demand? You're on mute. Sorry, Ina.
Thank you, John, and welcome. Oh, sorry, happy to be back. I had a minor IT catastrophe here. Well, I think there's a bit of both. I mean, last year we actually did, I think it was 37% of our new loans in the climate sphere, which was actually over the target. So there certainly is demand, but there's also push on our side because we have to adapt the products. First of all, we have already committed to aligning our climate and environmental lending to the evolving taxonomy of the EU. So we have to redraft a little bit our products and the definition. So there's work on our side to be done as well. But we see that clients are also quite interested in having something which can be labeled as a green loan, or then this sustainability linked loans is also something which is of interest. So we definitely see both. There is demand. Is the investment in Europe enough? No, I don't think so. I think everybody agrees that we can have more, especially in the green infrastructure. But the clients who are investing, they are clearly investing on getting something which can qualify as green and sustainable. But like I said, there's also product development to do on our side in that sense, and that work is ongoing. We have committed on the liability side that we will align our sustainability funding products to the EU taxonomy, and also on the lending side, but this means that new rules and definitions have to go into place so that we can be sure what we offer to the clients.
Okay, thanks. Broadly speaking, how many green assets do you have at EIB?
That depends on the definition of green. Yep. Because we look at the climate lending per se the target has been around 25 years now for several years, and we have got that or slightly above, and last year even clearly above. So on the stock, that's a bit difficult question. I haven't checked that number, but I think it is growing, and we have the target in a few years' time to be 50% climate and other environmental. So yeah. The target is 50. Yes.
Okay, thank you. I've had a very interesting question in from the audience from Joachim Nagel, who indeed used to be at KfW. And I'll direct it first actually to you, Ida. It's quite an interesting one, which is green finance at the end is all about impact. Measuring impact is very difficult, and there's no common standard how to do this. How could this be resolved? So that's an interesting question. We might not have easy answers, but do you have thoughts on that, Ida?
Well, yes, exact thoughts maybe less at this stage, but I think in this respect, in many fields, not maybe in all fields, we already have the taxonomy will help us in providing, for example, some screening criteria which we can use also as indicators. But then, for example, if you look at, let's say, renewable energy, how much greenhouse gas emissions does one wind farm or solar farm cut? That is not the exact science, because it depends on lots of assumptions, how much the sun shines or how much the wind blows, etc., etc. So these are assumptions, but I think if we have a fairly similar framework, we are fine. It does not need, even in my opinion, to be exact science. We need to have the right direction, and we need to have what the taxonomy also calls a substantial contribution. So the steps needs to be large enough. Is it then a question of millimeters? I don't think so. The direction and the speed of movement need to be correct, and then we can sort of work with the rest. So I think let's not try to be perfect, because in this case, I think perfect might be the enemy of the good. Let's just try to get into the right gear.
Thank you, Ida. Tim, any immediate thoughts on the question of your former colleague now at the BIS on how KfW would measure impact on the asset side? This is.
So thanks for the question, Joachim. The first point, I think what Ida said, taxonomy helps. I think absolutely we welcome also taxonomy. Yeah. I think we don't know now exactly in detail what will change. We see this is the second half, and of course, we also have to adapt in the one or in the other way to that. I think, of course, the further development of the impact reporting is very important, more transparency. I think there's also the question of the benchmark, like Ida said, also how we make this comparable, also to have a clearance about for the investor, what does it mean exactly of impact of the lending, what we did. And I think this is something where it is currently, I would say, still difficult, as we have different benchmarking, different views about it. We also see this in the ESG ratings. They're also not one-to-one comparable at that point. But I'm very confident this is, of course, like Ayla said, is something we should further develop by that. And of course, EU taxonomy helps with that.
Thanks. Willem, briefly from you, how does BNG measure impact, if you do? Any comments on Joachim's question?
Yeah, well, to start with, I think we have to make a clear distinction between impact and output measures. A lot of things are not measurable in terms of impact, but are measurable in terms of output. Numbers of houses, health, energy labels, these kind of things. In terms of impact reporting, we started with the impact on our own energy consumption and CO2 output, and now we are using the PCAF methodology. I don't know whether you know it, but it's the platform for carbon accounting for financials. It's an international platform where we publicize the output of ourselves, our clients on different levels. On our lending, that's a different story. Because we are doing balance sheet lending, we're using programs where we try to link our activities towards the UN Sustainable Development Goals.
Okay, thank you. I'd like to go back over now to capital markets, how all of these programs get financed. Siegfried, I want to talk to you a little bit more about how the next gen DMO, should we call it for short, is going to work. We've heard a little bit about that from Mr. Koopman a moment ago. Sounds like a pretty heavy duty thing that is perhaps on par with the US Treasury in due course. It's a major deal, I think. How will it work? Will it have its own permanent staff, for example? Who will they be? And then tell us a little bit about the yield curve that we've already heard about.
Well, one difference now in building what you call NGEU DMO, I'm not sure if this is politically correct, if I would say that. But let's take your expression. The difference in building this compared to what I experienced with the EFSF and ESM is that the EU has already an existing funding team, an existing funding infrastructure. So we are not starting here from scratch. So there is a team already there, which is currently supported by secondis from supranational institutions, EIB, ESM, but also from national DMOs. So we are collecting a lot of expertise from this SSA market and from the sovereign market. Here we are combining it, and this creates a strong team and the right combination of skill sets here to set up the funding infrastructure and the funding strategy for NGEU. The combination of internal staff and external staff. Over time, there will be a slight increase of internal staff, and it's good practice of the European Commission to have on a regular basis in all areas, not only in the funding world, exchanges with national experts, and this secondment model is a quite usual setup for the European Union. So here we will have in the long run a DMO, which has a strong internal pillar and will always be benefiting from additional external or temporary support. Regarding the funding activities under NGEU, as already mentioned, we are thinking about a more sovereign style activity with regular presence on all parts of the curve. We have a natural limit. NGEU is limited until 2058. Until 2058, all the debt needs to be paid back. So we will not be available for the ultra long transactions like 50 or 100-year bonds, what we have seen from other sovereigns. But we can serve up to 30-year, 31-year, a little bit longer. We can serve the market here with supply, starting in the bond side with a standard 3-year maturity, I would say. We will use here, or we are planning, I can only talk about plans at the moment, nothing is finally approved and written in stone at the current stage. Also to issue not only in syndications as we do it currently, we want to add the auction format here. We want to bring bonds to a really liquid outstanding volume, not only with the first transaction, the first issuance of a bond. We will tap the bonds over time. This D-link Gerd-Jan described in his speech of our funding activities from the lending activities will enable us here to have more flexibility in the timing when we go to the market, in the choice of the maturity, the instrument we issue. So here, regular supply on all parts of the curve, via syndications, via auctions. This can be expected. At the same time, if you do such a model, syndications and auctions, this must be supported by a strong primary dealer network. We are also working on that, which will support us in the auctions, in the syndications, but also this is a typical obligation of primary dealers. They have to support the liquidity in the secondary market, so that this primary market and secondary market, the way they work, the way the bonds are traded, this must fit together. So overall, this will be really a liquid curve, a safe asset, a good opportunity for for investors to buy the European credit in a liquid asset, in one liquid asset. So this is the plan, and all this will be supported by our presence in the bill market, this EU bill program we have in mind, where we will also on a regular basis, and the typical instrument here is the auction format, provide here interesting investment opportunities at the very short end. Something which is maybe especially interesting then, for example, for reserve managers outside Europe, a new alternative to invest here, the euro reserves, and will hopefully also support to make the euro attractive here as a reserve, more attractive as a reserve currency.
Oh, presumably with things like a repo market as well. What you've described, I know we have to be careful because of the politicization of the language, but what you described to me, I mean, really does sound like a heavy-duty DMO to me. Do you think, and you may or may not be able to answer this, what happens after the 750 billion? Will it be dismantled? May there be another 750 billion to borrow after that? I realise this strays into the political, but what's your instinct as to whether the structure will survive the current programme or not?
So what I can first talk about what is the current status of decision. The current status of decision is up to 750 billion in 2018 prices, which will mean until the end of 2026, something in the area of 800 billion. Up to 800 billion are made available via NGEU. They will be funded until end of 2026, which will deliver 150, 160 billion funding on average. After that, and this is also a consequence of this new funding strategy, the current one, the back-to-back funding strategy, that you have the loan, you have the funding, and the cash flow matches. Now we will have here a maturity mismatch, means we have on the EU side to roll over our debt. So even after 2026, when raising of new liquidity is completed, we will have to roll over maturing debt because the loans will still be outstanding. The total rollover needs depend, of course, on the structure of our funding, on the finally needed amount, but it will be significant. When based on my experience with the ESM, EFSF, they have 300 billion of outstanding debt, and at the moment, purely rollover needs of around 25-30 billion per year. Now you can do the calculation yourself. It depends, of course, on the structure, but you can scale it up. There will be a meaningful presence of the European Union in the market even beyond 2026, even without no further political decision. But you were talking about the political decisions. I do not know that.
Of course.
A year ago, nobody thought about NGEU. Now we have it. So 5 years, looking 5-6 years ahead is quite a long time frame, and a lot of things can happen.
Okay, well, in other words, the structure will need to survive the borrowing window anyway to some extent, and maybe it'll hang around and be used for other things if that's what the political authorities decide is useful. I think that's what you're saying. I'm going to be cheeky and remind everyone of CARDES, which is a French sovereign borrower that was supposed to disappear in the mid-2000s and is still very much with us. So anyway, we'll see if that happens. But thank you, Siegfried. That's very useful and interesting and exciting. I think that's a really major deal in SSA borrowing denominated in euros. So to come on to that theme a little more broadly, we heard on one session, Ayla, that we ran alongside the IMF in October from an Asian investor who said the program that Siegfried has been talking about means that the euro is here to stay. Sounds like an odd thing to say, but this was an attitude in some Asian investors. After the wobbles 10 years ago. Are we seeing a shift in demand for euro assets, particularly from Asia and official sector investors? What are you seeing there, Ayla? And then I'll ask the other panelists as well.
Yeah, thanks, Sean. It's a good question. I think one thing that is sort of dampening a possible demand is definitely the negative rates that we have for such a big part of the market. If we were in positive rates, we might have, or even zero, we might see different moves. Of course, official sector investors, central banks, their currency allocations also do not move overnight. But I think this, especially the sort of the speed and the political process by which all of this has been put together has definitely been convincing or comforting for the rest of the world. Although within Europe, I think we did not. We saw things differently even during the European crisis. But I have seen, for example, investors, not necessarily out of Asia, but people, for example, who have been hesitant to step into, for example, the Euro SSA product because of a perceived lack of liquidity, who are looking for, I don't know, Bund, OAT, JGB type of liquidity, or US Treasury type of liquidity, who are then now feeling more comfortable with the Euro SSA market, for example, because there's a new big issue out there. So whatever it is in concrete terms, I think we will see over time, and I'm convinced that as soon as we see more or less zero rates, we will see much more interest towards the currency. I mean, it is very punitive at the moment, but already this where we are now, I think it has definitely given much more comfort to a lot of people around the whole concept of Europe, EU, Euro, whichever part of it you take.
Thanks, Ayla. Tim, what about you? We're going to come back specifically to sustainable investing in a moment, but just more broadly on extra European investors in euro-denominated securities. Are you seeing any changes there as a result of the work that Siegfried and his colleagues have been doing and are about to do?
I mean, it has been mentioned before, and it's something that I absolutely can sign, that EU as a new issuer definitely contributed in a positive way, also to market liquidity, etc. And if you remember back, the euro is not at all, it's only 20 years, it's now 20% of reserve currency worldwide. Yeah? So it's really a strong development, what I personally think. I think US dollar is now at 60%. And we have, of course, a strong support politically, will-wise, what we do with the NGEU. We have a clear announcement in the past. I remember the Draghi speech, whatever it takes. I think this was clearly a strong signal to the market. And of course, the ECB now also with regards to buying programs. And of course, the overall rate level, like Ayla said, is also, of course, contributing to that. what we can see here in KfW compared to last year now to this year, that we have a little bit more shift of Asian investors in our transaction, what we have seen this year. In our Euro transactions, I think the first 10 years what we did in January, we had an Asian investor base of around 25%, and yesterday's 5-year transaction what we did, we had an investor base about 20% of Asian investors. So I think there's more demand coming in, definitely upsizing volume-wise. This is something what we definitely can see in a nutshell this year.
Okay, thanks. Willem, and you, just briefly on general trends in investors, not just sustainability, which we'll come back to.
No, but I of course I agree with Ayla and Tim. What we also have seen, I think that's what I wanted to add to that, is that also Asian central banks have extended their yield curve, their possibility of buying longer term. The euro market, historically, especially the last 3-4 years, was a market which was 7 to up to 30 years, and lots of central banks were not able to buy longer than 7 years. You've seen an extending of that period, and what we've seen is that we see interest in longer trades up to 15 to 20 years, also with Asian central bank interest, and that's an interesting development as well. And these banks, they have to adapt themselves to the market circumstances, and it takes some time. But we've seen that in our books, and maybe we've seen a little bit more euro buying than dollar buying, but it can also be originated by the fact that our total funding has been, let's say, shifted a bit more to euros than to dollars because of the favorable market circumstances.
Interesting. Governor Wenzel, briefly from you on investor trends.
Well, we always have seen a strong demand for our euro bonds from Asian investors. Whether this will change now and whether there's enough appetite from, for example, Asian investors once the EU next generation comes to the market, that remains to be seen. Because in the end, as Ayla said, there's a lot of inertia in the market. It will not change overnight. It depends on the trade flows. If you need to hold more euro-denominated bonds as a central bank, it depends, and it will not change. I don't see any change there even in the medium term or long term. How international commodities internationally traded are denominated. They are denominated in dollars. There's another currency coming to the markets, the RMB. When you look at bonds issued in Asia, they are denominated in China in RMB. So I think the EU, the euro will have it. It will certainly contribute to a stronger role for the EU as a currency, a reserve currency. But it will take time, and it will take much more time and action. So far, we have had announcements, but we have to prove that we can get results, credible, transparent results. And it also depends on the stability of the European economy. And then I think over time, the share of the euro in central bank reserves, for example, or internationally traded, will rise.
Okay, thank you. Back now, from more broadly from the currencies, all very interesting developments to green sustainable bonds. Siegfried, I've had a question from the audience I think's important to ask, and you'll have heard it before, from Doris Kramer. Isn't there a risk of cannibalization in the green bond issuance market from member states? If green expenditure of the member states are used as underlying for the EU green bonds, will that constrain the sovereigns themselves from using those assets? It's similar to a question I asked at the beginning. What's your view on that, Siegfried?
Well, as mentioned at the beginning, all eligible expenditures for NGEU green bonds will be additional expenditures of member states, which wouldn't happen without NGEU. So these is additional money, they're additional expenditures, and so I do not see the cannibalization to the situation without NGEU. We are not replacing here financing of member states, which would have been there.
Okay. Okay, thank you. It's a clear answer. I want to spend a little bit of time on taxonomy. See, this is a discussion that has been had for a long time. I don't want to spend too much time on it. We heard earlier from Marjun, I think there seems to be some real momentum now in the taxonomy discussion, and we've heard from Siegfried, in a sense, that'll be given an enormous boost by using the EU taxonomy to qualify the 30% of the next-gen scheme. Ayla, I can remember talking to you about taxonomy perhaps 10 years ago with Tim's predecessor, Frank Tchaikovsky, and we're still talking about it now. Do you think those issues have now been solved from your point of view?
I don't remember what we discussed 10 years ago. But,
that we needed one, and that's been broadly true until now, I think.
Yes, I think that is definitely well on the way. It's not done yet, of course. I mean, we have, in terms of the areas that needs to be done, 1/3 has been done. So there's more or less done. I think we are getting within a couple of months the final word on climate, but we still need to do the other areas. And then, of course, this work is continuous. I mean, it's not something that we set in stone in 2020 and 21. Technology evolves, things evolve, so it needs to be updated once in a while. And of course, the Commission is now working also on the sort of significant harm, the so-called colloquially called brown taxonomy, and so on. So there will be more elements. But I think it is needed because for the most part of the time that I've been involved in this market, everybody has been missing definitions, clear definitions. And of course, when somebody works on those definitions, not everybody's happy with the definitions, but that's perfectly normal part of the process. But I think it is definitely useful. And I think it will have quite a lot of implications even outside Europe, because the regulatory things tend to go the way that the people who have clearest, or maybe even in some cases strictest regulation, that becomes the standard. Because if you're an asset manager who offers services globally, there's no point of view for you to offer different products in the US, in Europe, in Asia. You just go according to the one standard which fits everybody. And I think this is clearly, at the moment, this is Europe. And that makes their life easier, one standard, and then you can sell it to everybody. So I think Europe is sort of at the forefront of this development, which is nice. It does not mean that everybody needs to do exactly the same thing, but I think everybody needs to take it into account how to do it. So at EIB, we've been very happy to be part of that work. Of course, it gives us very good information on what's going on and what the discussions are. But I think this was definitely a tool that the market needed.
Thanks, Simon. As I say, the EU taxonomy has given an enormous boost through the Next Gen programme. Tim, I mentioned your predecessor just now, and the discussions then were then about the idea that KfW would solve this through its credit standards rather than its issuing standards, so that all assets would qualify as sustainable. But I certainly talked to an investor yesterday, a big one, asset manager, which also helps central banks, who still sounded confused about taxonomy. What's your view on this issue, Tim?
No, it works. Sorry. Gives me 2 seconds to think about your question. As a first, I think we will be member of the technical expert group. Yeah? And of course, this means that also we are supporting taxonomy. And I think what Ayla said is, of course, to make standards. Yeah? But very important is also standards develop in the future. On the other side, if you look on KfW side, it's also that we like to develop further, especially, as mentioned before, as example, with regards to our SDG mapping and reporting to the contribute to the sustainable development goals. Yeah? So I think on the one side, we have the taxonomy clearly on the one, as with regards to the overall goal, yeah, but also I think the development and the transparency, how the holistic view is of the organization is very important. And I think this is also where we, as KfW, going this way, a clear transparency with regards to where we do our lending, also with regards to the SDG mapping, and also show the way with regards to Paris compatibility and with regards to KfW financing activities. One of our clear goals is that we give very clear in the next few weeks sector guidelines step by step, how we like to go the way and how we like to lend in the future with especially emission intensive sectors. Yeah? I think this is all a part of a step of a road where we're going step by step now.
Okay, good. Willem, would you agree? Taxonomy still seems to confuse some investors. What are you hearing from them?
Yes, well,
a common set of standards yet?
Yeah, well, of course it's confusing because it's a matter of definitions and it's a very complex world we're living in. We're not living only in a world where we are doing limiting CO2, we're also looking at NOx and et cetera, et cetera. So it is confusing. So we need a clear taxonomy, that's for sure. We need to implement that. Of course, this taxonomy will be implemented in regulation and legislation. And that has a lot of spillover effects as well. If you look at our institution, the spillover effects you see in, for example, our risk assessment. You see it in our risk appetite. You see it in the credit application process where we have to supplement the credit application process with ESG standards. A big confusion still is this do not significant harm methodology, because it's very, very hard to measure that. For an example, the wind parks which are built will have a certain positive impact on the CO2 output in the future. But when building during the construction phase, there will be extra CO2 output, and we have to measure that in one way or the other. So it's not absolutely not done. But what is clear is and that we need to have this laid down in legislation, and that we know what, and that everybody is also, let's say, in scope. We are not in scope at the moment. As a bank, we are not in scope. It's asset managers which are in scope. But we have to adapt ourselves, and we have to make sure that also the bonds we are sell are fitting into that that criteria the investors are expected to use.
Okay, the invention of transition bonds seems to be extremely helpful here as well. We haven't talked much about that. That provides an interesting bridge between pure rate of growth.
Yeah, but on the other hand, oh, sorry.
Carry on.
Yeah, I think on the other hand, we have to be careful with inventing too much names for different sorts of bonds. I think we have to be transparent, and every new definition causes probably also new complexities and uncertainties. So we have to be careful there.
Are you raising a bit of, sorry, a quick one. I'll come to you, Governor Wenzel, right away. Just on that point, Willem, are you raising a bit of an eyebrow at the concept of transition bonds?
Not on the concept. On the fact that we are trying in this market to find all kind of different names for more or less comparable bonds. I think the transition concept as such can be used, but we have to make sure that we implement that into the regulations and the taxonomy as it is right now, and not try to find another way to make new definitions.
Okay, I mean, some might argue, if they're being cynical, that it's a path to or a means for greenwashing. Governor Wenzel, over to you.
Well, I just wanted to come in and to join Wilhelm. I think we all agree that the EU taxonomy is important and was much needed, but there's still a lot of confusion in the markets about the definitions, and in particular how you measure and whether you have the data for it. Now, the EU clearly has a chance to be the leader here in the market, as, for example, other regions in the world, in particular the US, are now finding its way back to the Paris Accord. But in the meantime, the EU has an opportunity to use that time and to come up with convincing definitions. But I just worry, and we knew it from our practice, internal discussions and so forth, how difficult it is to measure things, to have the data, the right data. We have to build up the in-house capacity to measure things and to have the data available, which we might actually then purchase somewhere else. A good business then for the rating agencies or for the auditing firms, all those who are sitting on a huge amount of data. So that is a little bit of a challenge. And we have to strike a fine balance between overly ambitious here, and on the other hand, making it difficult for countries to come up with the right projects. So far, we have talked a lot about announcements, but not real action so far. We are struggling, and when you look at the recent last year issued guidelines by the European Central Bank, guidelines for including climate change risk in your risk management, it seems to be a nightmare. I mean, everybody's doing it its own way, and we have to find our joint way to move forward. So in a transition period, one thing can only be helping here, which is be transparent to your investors and let the investor decide what to do until we have a broadly accepted, agreed framework for measuring, for the definitions, for the criteria, for the measurement, and for the data.
Okay, thank you, Governor Vance. So, I mean, there seems to be a lot of work being duplicated at different investors doing broadly the same things, but not exactly the same things, which is therefore generating all of this work. So if that's somehow amalgamated and unified, surely the markets will grow even faster than they already have. Just briefly before we move on to a final question or two, I wanted to ask about pricing. There used to be a little bit of a pickup for the investor for green. Is that still there, or is the demand such that actually it's cheaper for you as issuers to issue green bonds? Over to you, Ayla.
I think the initially when there was a little bit pickup for investors, it was especially due to liquidity or the lack of it, rather, at least in the perceived terms. Right now, it's a little bit to the other way around, and we have, for example, we have a comparable curve in green and in sort of normal bonds where we have similar maturities, similar sizes of issues, etc. So you can actually compare apples to apples. And there is a fairly consistent difference, but it's a couple of basis points, 2, 3. It's not a huge one. And of course, for a new issue, especially, I know that this is a difficult point for corporate treasurers. Nobody can promise to you what it would be. But the one thing that is important, and this has maybe been buried a little bit under the extremely inflated order books that we all have enjoyed in the recent times, is that those bonds which have these features, specified use of proceeds and with a structure and reporting, they enjoy a very good reception. I mean, even when the markets are tougher, you can issue them more easily than you could a normal bond. So there is a difference, but sometimes it is measurable in basis points. Sometimes it's measurable more in other qualitative factors.
What about you, Tim? To what extent are conventional bonds and sustainable bonds trading at par, and should they?
I think first they should, yeah. But it's also, of course, the question of the quality and transparency of the reporting, of course, the quality of the assets in the background. I think that's very important, and transparency, as mentioned also beforehand. I mean, we from KfW side, we do since 2 years green bonds in really benchmark format. And what we can see with this large liquidity-driven bonds on the green bond side, we have a premium, a small one, like Ayla said, it's something on our side, so 1 to 2 base points. Yeah? What we can see if we compare, as example, the twin bonds from the Bund, yeah, and of course there's a huge demand also here. And just look at yesterday, I think Italian's green bond transaction in the order book here. I think, as example, the twin bonds of the Federal Republic, I think they have 3 to 4 base points of greenium. What was my last info? So I think there is greenium, and I think there's still currently more demand than supply. What we see here.
Thank you, Tim. Last question over to you, Siegfried. Sadly, we've run out of time, and it makes sense to finish up where we began with this enormous undertaking of the EU. That's very exciting. Would you expect your green yield curve, that 30% of the program, to be the same as the one that isn't green? Sorry, Siegfried, you're on mute.
Yeah, now it should be better.
Great.
Be difficult to predict here. Also, we can't build on our experience with all the SURE bonds we issuing and issued since October, to compare them with the other outstanding EU bonds doesn't really fit. These are different volumes, different liquidity, different coupon levels. So taking conclusions here for potential greenium based on the social bond experience with SURE is difficult. If we look at the numbers, up to 240 billion or 30% in green bonds, also the green bonds issued by the EU will be large and liquid. So I would expect then here that this is closer to the scenario Tim just described for the liquid KfW bonds, or where you have on the German government bond side here two comparable liquid, a non-green and a green one. So that here there might be a greenium for the upcoming green bonds under NGU. But this is an expectation. We have to see how markets take this then.
So investors should dive in while they can, I think. And with that, I want to thank you all very much, panelists, for this very useful and interesting discussion on green capital markets, this very exciting program of the EU. So thank you all very much indeed. Thanks again to Frank Scheidig for persuading us all to do this. I think it's been a wonderful thing, and I'm looking forward to hearing from his colleague Markus Pratsch in a moment, and also the US later. So thank you very much, panelists, for helping us today. I'd like to introduce now Hans-Jürgen Walter, who is the global leader in sustainable finance for Deloitte in Frankfurt, and has had a 25-year career advising financial sector clients. And he's talking on the future of the Chief Sustainability Officer, as he calls it, the sense maker in chief. So over to you, Hans-Jürgen, and thanks everyone for listening, and again to my panelists for being so open and engaging today. Thank you.
Thank you, John. Thank you all. Goodbye.
Bye. Goodbye.
So I think I'm on. Thank you very much, John. And hello and welcome to the Global Roundtable on Sustainable Finance. So I'm delighted to give you today a brief overview on our joint Deloitte and IIF paper on the future of the Chief Sustainability Officer in the financial services industry. And as you know, financial services firms are not only exposed to the physical transition and liability risk from climate change, they also have a critical role to play in transitioning the global economy to a low carbon reality through systems of sustainable finance. And the financial services industry sits firmly at the epicenter of the sustainability challenge and has a unique perspective on both the risks and the opportunities. In response to these risks and opportunities, some financial services firms have chosen to appoint a chief sustainability officer. With our global survey, we wanted to explore whether CSOs might have a significant role to play in further managing opportunities, not just risks. So the survey examines the nature of the role, the people who typically fill it, and what we can realistically expect them to achieve. So, but first, I would like to share some information on the background and the objectives of the paper. So the report contains insight gained from three major sources. So first, a market participant survey, which we conducted last year, followed up interviews with CSOs and other senior executives on the result of the survey, and last but not least, insights from Deloitte Sustainability and other subject matter experts to help interpret the results. The survey includes more than 80 sustainability professionals working in over 70 different organizations representing asset managers, insurers, banks in Europe, North America, Asia, and emerging markets. So we got perspectives from CSOs, chief executive officers, and chief risk officers, along with heads of strategy. In total, these companies finance nearly $16 trillion of economic activities through their loan portfolio, with combined assets under management of almost $20 trillion. The objective of the paper was twofold. The first, how are financial services firms mobilizing to address the ESG imperative? And second, how financial services firms see the role of the CSO evolving against this ESG imperative. We have structured the report and the following presentation along 5 key questions. So why do some firms have a CSO and others don't? What is the mandate of the CSO? Which skills and leadership attributes are required for the CSO in order to be successful? So how do the CSO contribute to governance, and what are the reporting lines? And last but not least, how this is likely to evolve. So actually, the CEO title is not new. So it has been in use for over a decade, but over the last 18 months, we have seen a notable increase in financial services firms appointing a CSO. The question is, why now? And why some, but not all? And based on our interviews with survey respondents and our observations of the market dynamics, there appears to be 3 tipping points that explain when a firm will appoint a CSO. First is change. When the external environment is changing faster than the inside of the organization, at the pace of change with respect to sustainability, which we all know is massively increasing. International standard setters, national legislators, and industry-specific regulators are all reflecting the changing reality. The second tipping point is stakeholder expectation. When the number of stakeholders and their expectations becomes too much and too wide for the existing structure to cope with. Here, the CSO is responsible for knowledge gathering and transfer and to manage the increasing spectrum of stakeholders like investors, rating agencies, customers, suppliers, regulator, and of course, employees and new talents as well. And the last tipping point is strategic risk. So when ESG risks become strategic, the CSO is needing to liaise with and support the CRO and the Chief Compliance Officer, but also the CEO and business heads to make sure ESG is a strategic imperative. Combined, this gives a clear picture that the CSO is a sense maker in chief. Where there is confusion, they bring coordination. 19% of the respondents say that there is no need for the CSO, or that at least the board is skeptical of the role. 14% of the respondents say that their organization is too small to justify a CSO. However, this implies that a CSO may become relevant as the firm grows. Sustainability is a broad and complex topic, which concerns more or less all areas of an organization. So the CEO sits in the middle of the organization's sustainability efforts, not because they are responsible for all the detailed work that is needed, but because in a transformation of this size, there is a role for a senior executive to educate colleagues, orchestrate change, and join the organizational dots. The direction of travel suggests that financial services firms will be expected to disclose more and account for their wider impact on common capital. Innovation in financial products is essential, both to meet anticipated demands and remain compliant with emerging regulations. Larger firms have the power to shape the markets and communities in which they operate. For them, sustainability is a challenge that is simply too big to ignore. Reimagining the firm's business model is a demanding task that involves dozens of functional areas. This is where the system thinking experience of many CSOs can help. So let's talk about the mandate. So when firms appoint a CSO, there is seldom a simple job description. So probably the role may never be as well defined as the CFO or the CRO, because it will depend on too many variables. For instance, the organization's particular business and operating model may expose it to more ESG risk than other organizations. Or the organization's history, culture, and existing executives may shape how responsibilities are assigned. In other words, only few CSO have the same background and the same mandate. However, there are emerging mandates that appear to define the role. The first mandate, aligned to the sense maker title, is to make sense of the external environment and bring it back into the firm. CSOs connect the dots, looking outside to see how the world is changing and how others are responding. They also look inside to see how well the firm is prepared for the changes on the horizon. They do this in order to help the organization reconfigure its business strategy and business model. CSOs are often system thinkers with the skills to make sense of complexity and balance the short term with the long term. Unsurprisingly, many CSOs have a strategic background. But the firm's strategy will only be successful if the organization is configured to deliver it. So the third mandate is about the how. So CSO provide thought leadership and align teams through engaging, educating, and connect. The pace and scale of change, along with the ESG agenda and its implications are longer-term success, requires effective communication and knowledge transfer across the entire organization. So in our survey, we ask respondents to rank several priorities for the CSO role in their organization. The results reveal a broad consensus on what the CSO should be trying to achieve. Reconfiguring the organizational business model is by far the most popular answer, ranked first by nearly 70% of the respondents. It's seen as an essential priority of the CSO, far more, and surprisingly for me at least, than overseeing compliance or reducing the firm's carbon footprint. So what skills and leadership attributes do CSO need? Let's say upfront, this isn't an easy job. Successful CSOs need a combination of skills. So first, a strategic sense, as a need to influence and implement strategy. Second, influencing skill. To change behaviors and the operating model requires amazing influencing skills, which leads to organizational knowledge, because to influence effectively, the CSO needs to understand the power base, specific organizational and personal objectives, and know what levers to pull. In the survey, we split skills into technical and leadership skills. Under technical skills, it is clear that domain experience around disclosures and reporting, climate science and regulation is important from a credibility perspective. But strategy and influencing skills are more important in the role. Strategy and influencing are rated much highly than more technical skills like data and quantification, climate science, regulatory skills, and compliance. This is not to downplay the importance of these skills, but to acknowledge that successful delivery requires a level of domain expertise that the CSO may not always have. The CSO is not just a subject matter expert, but strategy without technical content makes it hard for the CSO to persuade. At a minimum, they have to know how the products work and how the related risks are managed. Under leadership skills, the two most important roles are that of an executor and agitator. As many CSOs will attest, an important characteristic is to be an agitator of change. However, probably recognizing that sustainability is an important strategic component, increasingly CSOs are expected to be executors in terms of making things happen, be that supporting the business in developing new products and services or helping risk or compliance better understand the risks that they face. Question: to whom should the CSO report? We asked survey participants about the CSO reporting relationship. 1/3 of our survey respondents say they report to the CEO. The next most frequent reporting line is to the head of communications and marketing. However, 37% indicate their reporting line is none of the above. So this group has reporting line to the head of public affairs, chief risk officer, or director of corporate development. There are strong arguments in favor of the CSO reporting directly to the CEO, but that doesn't mean every organization needs to follow their lead. Other CSOs emphasize that the key to success is access to the CEO and having their vocal support. That can happen without the CSO having a report to the CEO. But a CSO with authority is an effective one. Setting up a direct reporting line to the CEO helps with nearly all of the sources of authority mentioned before. And the question is, how can the CSO help the CEO? So maximizing economy value is hard enough for the CEO already. Most financial institutions struggle to deliver a stream of rising profits, even without paying close attention to their second and third order impacts. The CEO needs a thoughtful ally to help make sense of it all. The necessary transformation that sustainability ultimately entails is likely broader than many in the organization realize. The CSO can help the CEO make the case for change by drawing links between risk and opportunity. CSOs face a balancing act as they build out their team and assign responsibilities in their team. If the team is too small, they may struggle to carry out the CSO's mandate with sufficient credibility and pace. It takes time to scan the environment, track all relevant developments, and then digest all this to update the knowledge that makes the CSO credible in the first place. Without the capacity to do this, the CSO team risks being perceived as a remote center of excellence that issues theoretical guidance but lacks the scale to engage with the business. On the other hand, if a CSO team is too small, it risks being seen as too large, sorry, it risks being seen as an alternative delivery team. And yet the task of embedding sustainability cannot be delegated to the CSO. What seems to be emerging as a consensus around a relatively modest team size. It should be big enough to support the CSO in key processes like interpreting the regulatory landscape, engaging with the landscape of material stakeholders, helping to formulate strategy and contribute to business planning. And last but not least, helping to formulate requirements for ESG data and management information. We found that the team size tends to be larger at banks than in asset managers and insurers. Nearly half of the banks in our survey report team sizes of more than 10 people, while 60% of asset managers and insurers say their team are between 2 and 5 people. So one explanation may be that the role at banks is more likely to overlap with delivery and implementation tasks which require bigger teams. The CSOs we spoke to who work in larger multinational firms also make the point that a hub and spoke model appears preferable to a large centralized team. Sustainability drivers and ESG issues may vary significantly from country to country or across business units. That means local teams need the flexibility to react appropriately and at pace. I come to an end now with our final question, which was around how the role will evolve. A key statistic here was that 99% of respondents said that the role will be more important in the near term. Looking ahead 5 years, 3/4 of respondents predict that the CSO will continue to play a separate role within their firm. Only 10% believe that the role will not be longer required, and 20% think the role will migrate to the CEO. It's not hard to understand why this is the most popular view. External stakeholders, including regulators, investors, and customers, are still changing firms' operating environments to a significant degree. Since none of these drivers looks likely to diminish over the coming years, nor does the CSO's role. So we don't know yet how things will develop with respect to what lawmakers and standard setters will force companies to do or stop doing, how they will be charged for externalities, or what they will need to satisfy stakeholder demands. So we still see a role for the CSO in future, recognizing that organizations still have a long way to go before sustainability is fully embraced by every function, process, and stakeholder. The CSO role will continue to be distinct, making a unique contribution to the sustainability challenges we all face. Thank you very much for your kind attention. And now I hand over, I think, to Markus.
Ladies and gentlemen, what an exciting event today. My name is Markus Pratsch and I welcome you to our panel discussion, Build Back Better. Do green, social and sustainability bonds play an equal role on the recovery agenda? Without doubt, 2020 was a very exciting year for the sustainable bond market. The corona pandemic gave social and sustainability bonds additional tailwind. On the other hand, we saw the green bond segment taking a very deep breather. But it had a very good comeback in the second half of the year with a new record months, and more importantly, in the fourth quarter, green bonds reached the most substantial milestone yet, surpassing the $1 trillion cumulative issuance since market inception in 2007. So let's take a little bit look into the glass bowl, how the markets will proceed in the future. And I would like now to welcome 4 experts on the topic of sustainable bonds. My first guest today is Ana Guardia. Ana is head of capital markets at Instituto Crédito Oficial in Madrid. ICO is one of the pioneers and most frequent issuers in the social bond market. Ana, thank you very much for joining us today. And would you be so kind to complete the following statement? The fixed income market can make a successful contribution to the recovery agenda if?
Thank you, Marcus. I think that if we, the participants and players in the capital markets, are capable of building and developing the infrastructure for the capital markets to finance the transition to a more sustainable model. And we will talk about it later, but the point here is that sustainable includes not only the mainstream climate perspective, but also the social perspective.
Thank you, Ana. My next guest is Tom Merwissen. Tom is General Manager Treasury of the Netherlands Waterschapsbank in The Hague. NWB is a bank of and for the public sector, focusing particularly on water and sustainability. Tom, good to have you on board. Would you please complete the following statement? The fixed income market can make a successful contribution to the recovery agenda if?
Well, thank you, Marcus. They can make a good contribution when they find a good way to add value indeed. So not only labeling things that we are doing already, but indeed make sustainable things either possible or cheaper or in any way improve on that.
Thanks, Tom. Let me welcome the next panel member now, Henrik Ponsen. Henrik is head of ESG at Union Investment in Frankfurt. Union Investment belongs to the German Cooperative Financial Network and is one of the leading fund management companies in Germany and Germany's leader for sustainable investments. Henrik, thank you for supporting today's discussion. Please complete the following statement. The fixed income market can make a successful contribution to the recovery agenda if?
Thank you, Marcus. Thank you for the invitation. And the bond market can really contribute if it manages to make the browns greener instead of just making the greens greener.
Thank you, Henrik. Last but not least, I would like to welcome Frank Richter. Frank is head of investor relations on NRW Bank in Düsseldorf and the father of the bank's green and social bond programs. NRW Bank is a promotional bank of North Rhine-Westphalia. Frank, great to welcome you to the panel today. Would you be too kind to complete the following statement? The fixed income market can make a successful contribution to the recovery agenda if?
Yeah, Marcus, thank you for the invitation and thank you for the nice introduction. To complete your sentences, of course, from my perspective, if capital markets could contribute successfully if they find a way to challenge the funds into a more resilient path towards CO2 neutrality in 2050. And this is not only about fighting climate change, it's also about maintaining Europe's industrial leadership, because there's a lot of competitions arising on the horizon. So we saw pledges from Japan, from South Korea, Canada, to be CO2 neutral in 2050. And China is, as far as I know, committed to 2060. So there is something going on. I also expect that the new US administration will join the club shortly. So to maintain this position, it is important to have a leading role in this current process of creative destruction.
Thank you very much, Frank. Let's go to the discussion of today. Anna, I would like to start with you. In 2019, you have expanded the color of your sustainable funding activities and issued your first green bond. What was the rationale behind it?
Well, okay, maybe we can start with a short presentation. ICO is the national promotional bank in Spain, and according to our bylaws, our main role is to promote economic activities that contribute to the growth and development of the country while improving the distribution of wealth, especially in sectors identified as a priority due to their social, cultural, innovational, or environmental significance. We started with a social perspective because back in 2014, when we started to prepare everything, we felt that it reflected better ICO's DNA. And we started issuing social bonds in 2015, when there were no social bond principles, not even guidelines, we followed the approach that was being developed at the time for the green housings, the green bonds. We worked with Sustainalytics then for the recommended external review and launched a social bond in the beginning of 2015. Since then, we have launched a social bond every year. And well, the story of the green bonds at ECO is that then in around 2018, was where we started to work on the green framework. We had renewable energy projects and a lot of things, but at the beginning we had some trouble to get all the data needed to make the impact reporting and to select the projects. So we had to implement a lot of work and to change a little bit or a lot the culture of the institution. And once we had the data for the selection of projects at the impact reporting, we wanted to provide investors with the possibility of investing in this kind of renewable energy projects through our bonds. And that is what made ECO to join also the green bond market and not only the social. Then I guess that in the end, we will come to a situation when we'll have a sustainable framework, but for the moment we have preferred to keep them separated as we identify a lot, or we think our DNA is quite social. And I'll tell you afterwards, but last year we updated our social framework to broaden its scope. And there are a lot of interesting things that are happening in the sustainable bond markets and a lot of innovations and advanced.
Okay, thank you very much, Anna. Tom, you did it quite the other way around. I mean, issuing sustainable bonds is an important part of your funding and sustainability strategy. You've started with the color green in 2014, and in 2017, you expanded your sustainable funding to social topics when you set up your affordable housing framework. What are your experience with the difference between green and social?
Sorry for that. Indeed, in 2014, we started issuing green bonds, and they are based on our lending to the water authorities. And actually, all the work the water authorities do is very much ticking all the boxes of the green bond principles. It's all about climate adaptation, climate mitigation, and biodiversity. So, in fact, they are responsible for the water level in the Netherlands. And as you may know, the biggest part of the Netherlands is below sea level. So it's quite an important job. And well, those bonds were very popular right from the start, actually. So of course, what we do as a bank, we are a bank for the public sector in the Netherlands, and we do budget financing. So we do balance sheet financing. So it's not projects. But so our formula is the use of proceeds being the lending to the water authorities. And well, that was very successful, as I said. So we attracted a lot of new investors on the books. And since then, we are a regular issuer in the green bonds. But also on our balance sheet is the social housing. And actually, that is the 2/3 of our balance sheet is in social housing. And social housing in the Netherlands, they provide affordable housing for people with a smaller income. But the main thing is, so next to that they give people an affordable house, is that they also provide community management. So they bring up the standards in the neighborhood. So they provide a safe environment. People can live in a home, and that way they can deduct more time to their education, and that leads in the end to economic and social empowerment. So really very social targets. So based on that, we started in 2017 the social housing program, the affordable housing bond, we named it by then. And well, we actually, in 2019, we amended the program to the SDG housing bond program, because it's not only social, what the social housing is doing, but also all the homes need to be energy friendly. In fact, in 2015, all the houses in the Netherlands need to be energy neutral. So they also renovate the homes, they make them more energy friendly. So that way, it's now a sustainable bond. It's combined green and social. And actually, in our experience, the green is still, well, of course, social bonds are lagging the green bond market by a couple of years, but green is still more popular with the investors. And I think for two reasons. For one, it's easier to provide quantitative reporting. So you can, on CO2 measurements, it's easier to provide quantitative reporting. Social is also quite a lot of qualitative reporting. So that's not so easy for investors. And the other thing is actually that green is more general all around the world than social. So you can imagine when you are an investor in another part of the world, that it's more in your interest to invest in green, so environmental things, even when you are in another part of the world, than in the social environment in, for instance, the Netherlands, which is, of course, quite a prosperous country. So then you can think, well, I have more social issues more close to home, for instance. So in that sense, the green is still more popular. I think actually that the social has huge potential, probably even more potential than the green when it comes to volumes. So, well, for us, as you mentioned, it's indeed very important. So of our annual funding need of 10 to 12 billion euros, we have committed ourselves to have at least a quarter of that issued in the SRI bonds. And up until now, we have issued over 16 billion euros equivalent already in these kind of bonds.
Tom, may I ask a question? I think it goes without saying that there is a direct connection between social housing and social bonds. So I understood that you map your fundings to SDGs.
Correct.
Are you also able to really show the direct impact of it? So not only the indirect impact by having the impact potential, but really by counting how many people have houses which hadn't houses if there wasn't a green bond or social bond of your bank. So really the additional realized impact, because background of my question, this is a huge challenge for us as equity and bond investors to show not only the attentionalized impact or the indirect impact, the impact potential, but really the realized impact in the real world. And if there's a hope that somebody can, I would guess, Tom, you and your bank. So how do you manage this?
Yeah, well, we try to do that in the reporting. So we have an annual newsletter, and the newsletter is set up by the umbrella organization of the social housing organizations, and also on the green bond on the umbrella organization of the water authorities. And of course, these are highly regulated sectors. So there is plenty of information on all sorts of targets. In fact, we can make a newsletter of like 300 pages with all sorts of figures by what they are doing and what they are achieving. And especially when we started the social program in 2017, that was still quite new. So to look for standards, we framed it along a couple of sustainable development goals. So we try to report along those lines. And what we do is that we report on the sector as a whole. So our newsletter shows all the figures and targets and achievements of all the social housing organizations in the Netherlands as a whole. And then our funding is a part of that, but it's not, we cannot relate the reporting directly to our bonds because it's not project finance, it's balance sheet financing. So we look at the sector as a whole as well. And so that makes it convenient, that makes it also robust, but there's not a very direct link between one loan of us and actually what they have done with it. So it's all together. And that way, well, we do report each year. As you look on our website, you see the annual newsletters and you see a development there because also, for one thing, there's feedback with investors, so they like to see things, and we try to amend the reporting to that. And of course, there are a lot of developments like the taxonomy and other kind of things that we try to stick to as well. So there's definitely evaluation in the reporting, so that changes each year. But as you want to know or one bond of ours directly linked with what is financed with that particular bond, that is not possible. It's more in general, the whole sector that we do the reporting on.
Just short on this, what I dream of is that in 10 years' time, I buy a bond of your bank, and then I can click and see a person called maybe Henk Melis living in a house where you wouldn't live if I didn't buy the bond. So I know there's a lot of technique we need, but this is in the end what our clients want us to be able to show. And we can only show this to our clients if you are able to show it to us. But I don't want to interrupt Marcus' plan for the discussion, but sorry.
No, but I definitely see your point, but there's a tension. And I think that the more precise your reporting is, even on a micro level like you wish, the more precise it is, the more sure you are that it's not fully correct.
Okay, great. Yeah, impact and additionality, great topics. Yeah, let's come back to the colors of the market. Frank, you also started with green bonds. Since last year, you are issuing social bonds. So which color will dominate the sustainable bond market, and especially the recovery agenda from your point of view?
I think what we could take from the pandemic is that the S is getting more and more important, and from our impression, we feel also that there is a kind of communicating tubes between the E and the S, and so E triggers structural changes, and these structural changes have an impact on society. So there are winners and losers, and we have to take care for those who are on the losing side and to make sure that they are not completely lost. So that is clearly the point. But nevertheless, we should not give up on the E. So the fighting climate change is a topic. Without doing this, we will be all on the losing side. I think going forward, there is room for both colors and need for both colors. On the time axis, I would assume that brown will be dominating in terms of capital market volumes for the next 6, 7, 8 months. And I think the key driver behind this will be, of course, the EU doing the sure bond program. But once this is finalized, I guess green is coming back, and green will be dominating in the long run. Nevertheless, I assume that social bonds has left its niche, and then they will be active in the market and visible in the market from now on.
Thank you very much, Frank. So you mentioned the brown activities. That's a very good buzzword. And going over to Henrik. So what are the core elements of credible recovery and transition?
I would say I don't want to focus too much on recovery because, the transition of our economy to a more sustainable one was important before the pandemic, is important within the pandemic, and it will stay importantly after the pandemic will be gone. So we really thought a lot about what do we actually expect from companies which we see as transitioner, how to become a transitioner, and therefore be interesting for us as an investor. And we see, to really cut it to the bone, 3 dimensions. The first is that you really have a strategy, not only a vision, a real strategy to become more sustainable. The second is that this strategy is backed by sufficient investments. And the third is that you have a management team which is incentivized and willing to deliver the plan with the given investments. Let me drill a little bit on what do we mean with strategy. The first is you have to have a sufficient, let's say, product transformational potential. So, and how far are you able to produce more sustainable products, or more importantly, to replace non-sustainable products by sustainable ones? The second is, how do you manage to process more efficiently all your organizations and your products? So the efficiency of all processes, this is core for us as a second aspect of a trustworthy strategy. And the third one is transparency. So do you participate at TCFD, for example, and are you able to show the carbon footprint of all your products and all your organization? Having this in place, a strategy with product and process transformation and transparency, then the investments, and lastly, the team. If you have a plan with investments and a team, then a transition should work. And then we trust in you and invest in companies like this, even if they're not sustainable yet. But we see our function to support or to help brown companies to become greener, than only to focus on the green ones to make them even greener. And this is the backing is no impact. There's more impact if worse companies become better than if good companies become better. And secondly, and also important, that high ESG scores are typically going with high evaluation. So, actually then the bet is you buy expensive to sell even more expensive. It could be a nice additional feature to say we buy some companies cheaper to sell them expensively later. And this is the idea of how to generate performance with transitioners.
Okay, thank you very much, Henrik. Anna, you already mentioned that you have recently expanded your social bond framework. So did you make your social bond framework even more social? So could you elaborate a little bit on this?
Yes, it's true that we broadened the scope of our framework. Our first framework was focusing, well, our impact reporting is mainly about preserving and creating employment. And we have a twofold business model where we lend through the banks to the SMEs, and then in other part of the business, we lend directly to the companies, to medium and big companies. For the first framework, we were focused in the part of the SMEs, what we call second floor lending. And there it was a model that was been working well. But then what happened is that we noticed that there were projects in the direct lending part that were also quite interesting in terms of, from a social perspective, that weren't being funded with the social bond projects. And I can mention a concrete project for a company that is called Ilunion, that 41% of the workforce is people with some kind of disability. So we were interested in this project, and we started to think about how to include the rest of our lending in the framework too. So and then COVID happened. So it was more or less at the same time. So then we included three main lines. One was COVID, because we had to provide liquidity to help fight the consequences of the crisis. And then we also wanted to include the direct lending through these kind of projects like the one that I mentioned. And also there one other problem that we have detected, that was the population in Spain. We are having trouble with in the rural areas. There are less and less population, less young people, and less work. And so we also defined the framework to address this problem. And with all this in mind, we updated our social framework in the beginning of last year, and then we inaugurated it with a transaction, a COVID-19 transaction that was the first public transaction in Spain. So yeah, and yeah, we haven't been able to use the framework for other parts like the direct lending or the depopulation, but we are working on it and we'll issue in this year. Well, we have the commitment to do a green bond and a social bond every year. So yeah, and I think I'm not leaving. I also wanted to mention, because the conversation that you were having before about the reporting, that we think that one thing that we find is useful for our investors is that when we publish our reportings, as we have many projects or many companies, as this is for SMEs, we normally do some interviews to some of the beneficiaries of the funds and publish one of them or one or two in our reporting. And yeah, we have received a positive feedback about that. Just to highlight that point.
If I may, Anna, I think this is very important to add stories to reporting, because we will never manage to measure this perfectly, but we can manage to give people an idea on what is behind the money. And this, let's say, anecdotic evidence is not lacking entirely, but we maybe deliver 10% of what is possible. And so I can only strongly encourage and wish that not only add another 100 pages on the reports you already publish, but that you add some stories people understand to gather more support for this idea.
Yes, I agree. It's very helpful. And also we try to keep it small, but yeah, to include that kind of information.
Maybe I can add something on this, because what we have experienced, of course, a big thing about this whole thing is the transparency, that you can actually see what is being done with the money. But for a couple of years now, we have an annual investor day, but also next to that, we get a lot of reverse roadshows anyway. So we get investors visiting us, so the other way around. And then we actually do visit sites of the water authorities and of the social housing. And it's an event where like 25, 30 investors from abroad, they visit the Netherlands for 2 days. And that is highly valued. And it's also very nice. For us, it's also a close cooperation with our clients, of course. But for the investors, they actually see the houses that are being created and what's being done on the social part, where you visit rooms for lonely people, for coffee, or projects to make the neighborhood safer. And that is probably what you are referring to, Henrik, but there people can see actually what is being done with the money as such. So good examples that to give it a face. And that, I think that's one of the main spin-offs of this whole thing is, of course, that your conversation with investors is not only about spreads and liquidity anymore, but really what are you actually doing with the money? So that's really a very nice add-on on the whole thing. And it's, I think, highly valued by the investors.
Yeah, just to play the ball over to Frank, a bank I was working for before was part of the mission of the renaturization of a river called Emscher. And this was done, if I'm informed correctly, by NRW Bank. So it was the first time in 10 years of working for a bank that I saw what happened with the money we moved. And it was a moment I won't forget. Yeah. So see this river, it wasn't there before like it is. And yeah, this is just important that we add on stories like this.
Unmute, Frank. Frank, you're muted. Okay, I think we have lost Frank for the moment. So, okay. We go on, and Frank will have the opportunity to answer it later. I would like to come back to Tom for a short moment. So global cooperation is also something which is driving the market forward. And in 2020, you have formed a partnership with the Japanese government pension investment fund to promote and develop sustainable capital markets through the focus on green and sustainability bonds, for example, and as well as also the incorporation of ESG assessment in fixed income investments. Could you elaborate a little bit on this?
No.
Yeah, well, indeed, we have set up a cooperation with GPIF, which is, of course, well, probably the biggest pension fund in the world, and it's very important point that they make the huge focus on ESG, and also because when they do that, a lot of people follow.
Okay, I'm back. Okay, good.
So especially, well, Japan has come up as one of the leading investors in the ESG space, mainly because that's what GPIF has not only set up with us, but with a lot of other issuers as well, a sort of cooperation that they really buy into the bonds through the asset management. So this is a very important point. So you can say that when you started with the green bonds, of course, it was mainly Scandinavia was leading, and then you had, well, of course, also in America. But now Asia is becoming very important indeed, and especially Japan because of initiatives like this. So, of course, we are very happy with this thing. Yeah.
Okay, thank you very much. So, Frank, the reiteration of the EMSHA, you were just elaborating on it.
Can you hear me now? I guess yes.
Yeah,
The EMSHA. Thank you for making the point, Henrik. EMSHA is a fantastic program. As far as I know, it is the largest water-related renaturation program inside of the EU 27. It is the objective is turning a river which was used as a sewer channel into a natural waterway. So it's a huge construction to separate fresh water from wastewater, and then to build a natural waterway in the region. Topics we have in mind is, of course, biodiversity, and to make the region even more resilient against heavy rainfall. So I think that is a nice project which ticks all the boxes of the taxonomy. It saves greenhouse gases. It supports biodiversity, and of course makes the region more resilient. We also have a nice reporting on that from the EMSHA Association. That is the association who runs the EMSHA business, and behind this association you find the municipalities surrounding the riverbanks. So they really counted species coming back year by year in the natural waterway, and it's a huge project in size and on the timeline. I guess it's in total amount is more than 6 billion euros, which must be spent over the period of 20-25 years. And NRW Bank is committed to do around 50% of this. And therefore, the EMSHA is part of our Green Bond program. So since many years, since 2013, when we did our first transaction, the EMSHA is as an adaptation part integrated in our Green Bond program. Yes, lovely that you know this.
Okay, thank you, Frank. So Okay, so field trip or reverse roadshow was a good buzzword, I think. Maybe we should go across a big pond, for example. So, Henrik, what significance does the change of power in the US have for the topic of sustainable finance, and especially for the sustainable bond market from your point of view?
I would say there was only headwinds in the last 4 years, and now we wait for a lot of tailwinds to come. But no matter where the wind comes from, we have to walk the way ourselves, or the Americans have to walk the way themselves. So when I look on the electoral program of Joe Biden, there is a vast amount of money to be invested into the decarbonization of the US. So this is important. then if I compare what happened in recent 4 years, my maybe a most important example is when President Trump said that pension investors shouldn't invest into ESG instruments. Yeah, so it was almost forbidden to support ESG or sustainability, and now we have 1.6 billion, or what is it, to be floated into this program. So to cut it to the bone, there was only headwinds and there will be a lot of tailwinds, and this is actually the direction we go to.
That's good to hear. I think we will hear about it more later in the American blocks. So now we come a little bit also to the regulatory part of the market. So Frank, the EU taxonomy or the future EU taxonomy from an issuer's perspective, is it a curse or a blessing?
I'm definitely in the blessing camp, yeah, thank you for the question. I'm in the blessing camp, and I show huge respect for the work of the technical expert group to publish the paper on the EU taxonomy and the technical annex. So that gives us a lot of information, and I think for the first time we overcome the so-called pub talks, what is green and what is not green. We have a clear guidance, even if you may complain about one or the other do not significant harm criteria. At the end, it gives us a good guidance, and for issuer, it is in a sense beneficial that we are able to structure our lending business to make this lending business compliant to the EU taxonomy, and of course to organize in the same way our funding activities, our green bond funding strategy. For investors, I guess it is also transparent to see and to make a calculation about their contribution to CO2 savings with their financial holdings. At the end, the taxonomy creates a reliable standardization, I would say, and under this taxonomy, greenwashing is becoming increasingly difficult. So that is clearly a benefit. Of course, there's a lot of debate in Europe about a single do not significant harm criteria, technical thresholds, and so on. But I would recommend not to be frustrated from an issuer perspective, be motivated, and if you have a challenge with one or the other threshold, make this challenge transparent, communicate it to the market, and I guess you will find acceptance. Transparency, as Tom mentioned, is at the end key, and clearly do not forget we are on a journey, and I would say a wait-and-see attitude is not useful and not supportive to reach climate neutrality in 2050. What you could also do with the taxonomy, and this is what NRW Bank did in 2020, we established next to our conventional refinancing curve, internal refinancing curve between assets and liabilities, a green refinancing curve. And that means, of course, that projects which were in line with the EU taxonomy were able to benefit from an additional interest subsidy. And what we did at the end, we were passing through or matching the greenium on the funding side towards the lending side. And of course, we believe in prices and volumes, and if you offer cheaper levels to make more green projects possible, I think that is the right way to give an additionality into the market.
Okay, thank you very much, Frank. So.
Sorry,
please go ahead.
May I ask, Frank, how do you manage these do not significantly harm criteria for your projects when you map your projects to the taxonomy?
I think a big advantage what we have is, first we are working with the taxonomy drafted by the technical expert group in spring last year. We are not, for the time being, not working with currently in debate the delegated acts. So the do not significant harm criteria are not really a challenge for us. So we live in a highly regulated market. So just to give you an example, if you would like to erect a windmill, usually you have to pass the environmental assessment and to see is there a trade-off between biodiversity and CO2 neutrality. That is all done in the German jurisdiction, and I believe this will be in other European jurisdiction as well. So we do not have so much complaint with that. Of course, housing is a critical point, and I know the debate about that, about the water flow of a tap, for instance. That is difficult, and God thanks, we are not so active in the housing market. We are more active in the area of renewable energy, more active in, you mentioned already, the EMSHA. Clean transport is another thing. So if there is no pipe emission, I do not have a problem to meet the technical screening criteria.
Okay, thank you. So Anna, when we talk about taxonomies, and you are as a pioneer in the social bond market, for example, do you think we also need a kind of social taxonomy in the future?
Well, yes, that's the short answer. I think that we do need a social taxonomy, but I'll explain why. I think it's not so easy to develop one that works for the purpose that we have here. It's true that the social perspective or the social bond market is not as mature as the green bond market is, and it has been going behind. It's true that last year we've seen an explosion of the market in terms of volume, and we expect a lot of growth also with the European Union issuing social bonds, and the market, or we expect that the momentum is going to be sustained, as the name of the conference or the panel. But we think that there's a lot of work needed yet in the social space. You were talking before about the greening the brown. It's true that I agree that we need to focus on the transition, but the transition is going to have or may have some social consequences. For example, it's going to have collateral negative outcomes for employment. I think do not significant harm is not enough, because, for instance, sometimes the funds can be oriented to fight these collateral negative effects, but can go to different companies that are not directly the ones that are creating the negative effects. So we need to implement mechanisms that can help to mobilize the capital to obtain these positive outcomes. I know that, well, here I'm talking about just transition. I know that there is a lot of work done out of the capital markets, and I think that in the capital markets we are going to see this leg more developed in the coming months and years. And also coming back to the taxonomy, until now, we have the standard of the market that are the ICMA principles, but the European framework in Europe is going to impulse a lot and to allow the investors to report and to give information that is credible to their clients. So I think it's very important that the social leg is developed too in the taxonomy. I don't know if we need a separate taxonomy or it can be inside. Is the EU taxonomy that can be social and green and need to be broader than it is today. But I know that there's a lot of work going on there, and even the green is not ready yet. It's quite complex, but the conclusion is that yes, we need also the social to be regulated and impulsed.
Yeah, thank you very much, Anna. So coming back to Tom, yeah, what do you think? Is it time for an ESG taxonomy in the market?
Yeah, well, I'm a bit mixed on this. I mean, I understand the need for standardization, and that's mainly given then by the fear of greenwashing. I don't know if you have that many examples really of greenwashing, but the problem is, of course, that you try to standardize things that are, but well, there are a lot of difference. Take, for instance, our green bond, the water authorities, Netherlands below sea level. There is no other country below sea level like we are, so there is no comparison to water authorities. Also, the social housing system in the Netherlands is very different from that in other countries, for instance. So then you try to put that in a sort of a standard, and there's a lot of effort in there. Of course, it's a huge regulation. I heard Andrew Cross this morning, and I think it was Andrew, and I sort of agree with him that you can also say, well, when it's good, it's good. Let's not make too much a fuss about, let's say, all the things that you have to put in to really, and as I said before, the more precise you do reporting, the more sure you are that it's not fully correct. So, the whole effort in doing that, and probably the investors, they always look by themselves anyway. You have investors who are more, when it's good, it's good. Some they have the standardized approach. Some they have their own ESG teams, and they really look deep into it. So they don't care too much about the standards as such. They have their own impact. They want to have their own measurements. So I'm a bit mixed on that whole standardization thing. And actually, well, what I see when I look at us, for instance, so we have green bonds based on the water authorities, social sustainable bonds based on the housing. For the rest, our balance sheet is healthcare, so hospitals and municipalities. So you can argue that, in fact, everything we do, we are sort of a pure player. And I do foresee that in a couple of years' time, that we would move to the pure player concept. And that would be, I think that would be a good development, that you have to look at the whole balance sheet of an issuer. You have to look at all their activities. And when you would have one ESG rating, or let's say you have a couple of ratings, but one rating for the whole company, I think that would mean an incentive for the company to improve on all respects, so on everything in their business. And that would have added value then, because then you like to improve your business to get a higher rating. So not only label what you do already and then sell it, and well, everybody gets a warm feeling, but then nothing changes so much, but really do it like that. But that pure player concept is totally opposite of what Henrik likes, because Henrik likes to see his invested dollar, how it's on a micro level. So there's a tension there. So one, you have the pure player approach, or you have the very specific approach where the investors like to see the CO2 reduction per invested dollar, for instance. So I'm not sure how that will pan out, but with this whole specific standardization, I see the benefits, but I also see the cons of it.
Thank you, Tom. So coming back a little bit to the topic of transition, Henrik, how can we make transition be measurable? And will we see more transition bonds in the future instead of green bonds, for example?
Yeah, so first of all, Tom, I agree with you. There's a limit of making things measurable. And I totally agree with your lovely Dutch pragmatic approach. If it's good, it's goed. Yeah, so that we shouldn't make it too precise. I just want to explain why I would love this idea of being able to report precisely where the money flows to and what the real impact is. This is just what our clients want to see. So I could imagine that in the future, many clients would say, I'm not interested if I receive 2 or 2.2%, but I'm interested that the money is really used for good purposes. And if you can't show that the money is used for good purpose, then I want to have 5%. And this is why we need to, why we're thinking so, let's say, intensively about how to be able to demonstrate the real impact of the money we are investing sustainably. Coming back to your question, Marcus, I think almost every company can find somehow a green proceed. So therefore, green bonds should be let's say, most important in the meaning that most of the issuers are still eligible for green bonds. The transition bonds are mainly important for the so-called hard-to-abate sectors. So companies which aren't green, where nobody believes that they are really green, but which we desperately need to develop in a more green direction to make the economy entirely greener. So let's say transition bonds are the more impactful tool and therefore the more important, but green bonds are the tool being eligible for more companies and therefore more important, meaning important for the majority of corporates. That's more or less our view.
Okay, thank you. Yeah, looking a little bit at the investing side. Frank, NRW is also supporting the sustainability agenda with a dedicated sustainable investment portfolio, which has been recently expanded. Could you elaborate a little bit on this? And is, for example, transition bonds also something which would fit in the future?
Sure, Markus. Yes, you are right. NRW Bank is operating a sustainable investment portfolio, and the reason is very simple. For an agency issuer, it's not only about fighting climate change with financing projects on the mitigation or adaptation side. It's also about developing the markets. And what Henrik said, that the transition bonds are coming on the scene. That is, of course, one of the results of the work we did in the last 5 to 6 years to develop the market. And if you would like to get an infant market grow, you have to support the supply and the demand side. And therefore, it was an easy step and a small step for us to set up in 2017 a green bond investment portfolio in these days. So our target was to increase this portfolio by 100 million on an annual basis. And at the end of last year, we ended up with 400 million. These bonds should be compliant with the green bond principle. So that is our let's say, benchmarks there. We recognized, of course, in 2020 that social is getting more and more important. We issued our first social bond, and therefore we broadened the scope of this in these days green bond investment portfolio to social issues. And of course, sustainability bonds are merging both aspects, so green and social, and these are also part of this sustainable bond portfolio. A finish line for this year, it should be around 500 million, and for the time being, transition bonds were not included. That is maybe the next step.
Okay, thank you very much, Frank. We receive a lot of questions from the audience, and I would like to start with it now. The first one is a clarification question for Tom. And yeah, Tom, you said that the more precise you are in your reporting on the use of proceeds, the more sure you can be that it's not correct. That sounds worrying. Can you expand on this?
Well, this was more meant in general, so not so much about our reporting, because our reporting is, of course, on an aggregate level on the sector as a whole already. So that's not very precise on a micro level. Of course, what we do is that we do the reporting with all on the whole sector and on many KPIs, and then we highlight like 5 or 6 examples of projects that are underneath. But as I said, it's not project financing. So it's definitely not, it didn't refer to our reporting, but I'm always a bit skeptical when I see very precise reporting on what has happened. Then, yeah, you know, how strict is that in the end? Even when you say, okay, the CO2 reduction financed with this particular bond was 1.2%. Well, then you're sure that it's not 1.2%, I would say.
Okay, I think Henrik wants to add something.
Yeah, maybe to add, if you take an onion and you start peeling it layer for layer, after you have all peeled all layers, there's nothing left. And this is exactly the problem with reporting too precisely. You have then a bunch of 700 pages but you don't actually understand what actually the money is needed for. So it's this onion problem of peeling too much and then we have nothing left.
Okay, thank you, Henrik.
Maybe if I can add a little bit there. So I think the problem with reporting is, of course, it's all about benchmark. So if it comes to CO2 savings, what is my comparable benchmark where we are working with? And I think that is where we need some standardization. Should we use a European benchmark, a national benchmark, or a regional benchmark, or whatever? So that is the reason why we offer for our investors 3 CO2 savings scenarios versus the European benchmark, versus the German or the North Rhine-Westphalian benchmark. So, yeah.
Okay, Anna, I think you have to add something.
Yes, I just wanted to add that I believe it's better to be able to report some figures, even if you know that you are going to commit some error, but you need to report. And also it's true that there are a lot of different kinds of portfolios from the social perspective, and when you have portfolios with a lot of loans for individuals or SMEs, you need to be able to report some numbers, even knowing that you're going to commit a small error.
Okay, thank you very much. Coming to the next question from the audience, we mentioned the pure player approach already, and so the audience asks, might it be useful to move away also for the issues here on the panel from the use of proceeds concept to more a kind of sustainability link concept as we see it with many corporates at the moment? So Frank?
May I jump in? So it depends a little bit on the purpose of your company. So NRW Bank has so many objectives to fulfill, and so therefore, I think from our perspective, it makes definitely sense to give clear guidance to the buy side. That is our green mission, and that is our social mission. So I think we should not mix that up.
Okay. Who else wants to contribute, Tom?
Yeah, well, we are in the process of setting this up for our lending side. So on our clients' side, we try to put in the sustainability linked concept. For us as the bank as a whole, I think it's rather difficult actually, but I definitely do see that also when you focus on the added value, that sustainability linked is of course a good way to try to achieve that. So in that sense, I'm positive about it. But for ourselves, I think it will be a bit difficult. But on the client side, we are trying to establish that indeed.
Okay, thank you. I have a very similar question, which is directed to Henrik from the investor's point of perspective. So what would you prefer in your portfolio, a kind of a sustainability linked bond or a pure use of proceeds concept? And when it comes to, let's say, a bond, would you more prefer a kind of use of proceeds green bond from an, let's say, critical issuer? Or would you say, okay, you would prefer a traditional fixed income paper, but from an issuer who has a good sustainability performance?
There are a lot of combinations now. I think 4.4. I think the topic of additionality, what we discussed when we started, this is key. So I like better a transition bond, for example, of a brown company, which changes something in the real world, than just a green bond of a greenish company where actually nothing has changed. So I think we should all be motivated to think things from the end. And the end we are all aiming for is to make our world and the economy more sustainable. But that doesn't mean that I don't like green bonds. I love green bonds. It's just if you ask me what is more important, then I would say, in the end, it's all about change. And the change is to make the browns greener, not the green.
Thank you.
Maybe add a little bit. Can you hear me?
Yeah, we can hear you, but we can't see you.
So I think I could argue from a German perspective. So you know that German government officials decided to opt out of nuclear power generation and out of coal burners, and we shut down the first power plants at the end of last year. And there's a straightforward schedule when the last burner will be closed down. But of course, we need electricity. Therefore, it is a very important tool to make this change and to build renewable capacities. That is our job as a development bank. So that is what we are doing, financing, and I think this must be valuable for the society, even if we are already a green company doing green bonds.
Just to give an example, Marcus, Ørsted, the Danish wind energy company, was 30 years ago a pure brown energy company. So they managed the transition in the meantime. So it's not about making Ørsted conquering the world. It's about making all companies following the path Ørsted already went in the last decades. So I totally support what Frank says. This is so important to make our contribution to really change the shape of brown energy there.
Yeah, thank you very much, Henrik. Very good comment. Now we have a question on sovereign green bonds, and this is directed to Anna because Germany and the Netherlands, they already have issued a sovereign green bond. So yeah, what can the Spanish government learn from ECO when it comes to issuing sustainable green social bonds?
Well, you know that the Spanish Treasury have announced that they are going to do this year their first green bond. They have been prepared and they are preparing everything to be ready. We have had conversations with them. For us, it was very difficult, as I said before, to put it. We had to change a little bit the culture of the company, and I guess that at the government level or the administration is even more difficult to do that. So, but they are managing, I think, quite well. They had some, well, they needed the new budget to be able to issue the bonds, and I guess that they are going to issue this year the green bonds, the same way that there are other sovereigns that are inaugurating their green bond frameworks this year too. So I hope this answered your question.
Mm-hmm. Okay, thank you very much. There is another question coming in also referring to sovereign sustainable bonds, and it's directed to Henrik from the investor's perspective, saying, okay, how did you evaluate the green bonds, the German federal government? Did they really create additionality?
I don't think that they create additionality. However, I like the trend concept as a start point to make this instrument acceptable in the market. So I see this as a first step in the right direction, but not at the aim as itself. Does this answer your question, Marcus?
Yeah, that's the question from the audience. I think this is fine. And there is a follow-up question also directed to you, saying when we look at the different states in Germany, we have also only North Rhine-Westphalia so far issuing sustainability bonds. Now recently Baden-Württemberg has announced to do it. I think Hessen is waiting in the wings. Would you like to see more, let's say, public sector bonds also from cities, for example?
I think it's just necessary that this happens because we need to change so much infrastructure in the coming decades to make our society more sustainable. And then it can only support this aim if the money is collected at all levels. So not only on a national level, but also on a regional and community level. So I don't find any argument which shows in the different direction. Why? So why not is my answer in short term.
Okay, thank you very much. And then there is another question coming in, focusing a little bit on the G of ESG. I mean, we talked very much about environmental green bonds, about social bonds, but why is the G neglected in this sustainable bond context? So who wants to answer?
Because this is just a necessary condition, actually reflected in the do not significantly harm dimension. So for Frank, it's easy. North Rhine-Westphalia has a good reputation, and we shouldn't doubt its reputation. I think the same is true for Spain and for Netherlands. But of course, there might be other states where this is looking differently, and there we need to reflect this and the do not significantly harm parts. So if there's any country run by a dictator, and where we have huge issues, and then they release a green bond, then we should think about it twice.
I would add that the G is, I guess, more relevant for the equity market, and here we are together from the bond market, and we are coming from a highly regulated background. So the G, I guess, is not a big issue for us. But on the corporate or on the equity market side, if you remember the Wirecard scandal, that was obviously a G issue there. So I see the G more on the equity side and less on the bond side.
Okay, thank you very much. Looking at the time, we are nearly finished. Ladies and gentlemen, how time flies. Unfortunately, we have already come to the end of the panel. I hope you enjoyed it as much as I did. But last but not least, I would like to ask each panelist for a final statement. So Anna, my personal wish with regard to the further development of the sustainable bond market is?
Well, it's for the market to sustain the momentum and to succeed in the task of mobilizing the funds for a just transition. And do not forget about the word just, and building back fairer, greener and better.
Okay, thank you very much, Anna. So coming to you, Tom, your personal wish with regard to the further development of the sustainable bond market is?
Well, for me, it would be more focused on the issuer as a whole, so on the balance sheet as a whole and all the activities, instead of on the specific labeled bonds. And well, to add on that, for instance, we have committed ourselves to the platform for carbon accounting for financials. So since 2 years, we report on the whole carbon exposure on our balance sheet already for, I think we cover like 94-95% of the balance sheet already. So things like that. So I think that's for an investor. In the end, you are investing in the party as a whole and not so much in that specific labeled bonds. So that would be my direction.
Okay. Thank you very much, Tom. So Frank, your personal wish with regard to the further development of the sustainable bond market is?
Micro was off. I believe that size matters, so I hope very much that the market will keep on growing without losing its credibility, integrity, and purpose.
Thank you, Frank. And last but not least, Henrik, your personal wish with regard to the further development of the sustainable bond market is?
This plant here is from a garden close to the Emscher. And I want to make this more happen, that our sustainable finance becomes real and that we can touch it like this and look at it. So this is my wish.
Okay, thank you very much for all the panelists. I think it was a very interesting discussion. And we are now looking forward to the next plans of the German government. And my next guest will be Carsten Löffler, and we will discuss the strategy, the sustainable finance strategy of the German government. Thank you very much, ladies and gentlemen, and see you in a minute. Yeah, ladies and gentlemen, welcome back to our Power Talk now, implementing the German sustainable finance strategy. I would like to welcome Carsten Löffler. Carsten is the chair of the Sustainable Finance Committee of the federal government, And as you already know, the committee was established in 2019 to advise the German government on the development and implementation of its sustainable finance strategy. Last month, the committee published its final report, which contains 31 recommendations for a sustainable finance strategy with the aim of making Germany a leading center for sustainable finance. Carsten, glad to have you here on board. So,
yeah, many thanks for having me.
Yeah, welcome. So, Carsten, the road towards the final report, 38 experts with different backgrounds, different views, and partly conflicting goals. In addition, numerous observers. How did Christina Jeromin and you manage to create a report whose content everyone could reasonably agree?
Yeah, that's a very pertinent question, Markus. Basically, it was not us, but it was the Sustainable Finance Committee in its entirety, including observers, who actually made it to that stage that there was eventually those 31 recommendations to the federal government. What certainly helped you to achieve that during that 1.5-year process was just that, process, and again, sticking to process. And we entrusted the content work to small teams that were composed by different stakeholders. Say, mixing up different stakeholder groups, thinking about the challenges that were identified before and trying to work out solutions for that. And then providing a first draft recommendation to the plenary with everyone being able to comment was a very good exercise because by that we ensured that everyone could make his or her voice heard. And that was incorporated to the extent possible. And in most cases, that was the end. And then we had one of those recommendations. In some other cases, we had to see how to resolve different perspectives. And we did that by just a simple voting procedure. That's worked pretty well, I'd say, in retrospect, much better than I had expected initially. But what made it actually possible is that there was very much solution orientation by all stakeholders. So what we really saw across different stakeholders like financial sector, real economy, science, and civil society organizations was that, yeah, everyone was aware, okay, we want to find common ground, and everyone worked toward that common goal.
Okay, thank you, Carsten. How did you feel about the cooperation with the federal government?
Yeah, that was quite interesting because so we had in mind the example from the European level with the HLEC and then the action plan by the European Commission. What our mandate was, okay, please come up with concrete and tangible recommendations. I think that's something we delivered on, and be ambitious. So we had various talks with the secretaries of state, and yeah, they again and again said, okay, please challenge us. And that's what we did, actually. And I think it was a very fruitful cooperation. The ministry representatives listening in, having full transparency and being supportive of this process. So I'm pretty happy with how it went.
Okay, glad to hear. So who are the main addressees of the report and why them?
Yeah, it's natural that when we think about the recommendations to the federal government, it's first of all, it's the federal government that's the main addressee. Though, and that's pretty important, the ultimate addressee is, of course, much broader than just the federal government. And what we have here, and can be seen easily on this summaries page that we incorporated into the report, that, of course, the financial sector is one of the main addressees as it's recommendations for a sustainable finance strategy. But that's notwithstanding that the real economy, say the non-financial companies, are quite an important addressee as well, in particular when it comes to transparency issues in financial and non-financial reporting. So in that respect, it's a very broad-based audience that we try to address. And on the public in the public space, it's not just that we thought about the federal government. We thought as well about the sub-federal institutions like the federal states and even municipalities, though of course we know that the responsibility of the federal government is not that far-reaching, and at least not in a German context. But even though it's very important, and it was very important to us to have a holistic perspective, to see the financial system as an ecosystem that is not just isolated from reality.
Okay, thank you. So what is key for successful transformation, and are there things that should guide us?
Yeah, that's an interesting one. See, that gets down to the question, okay, what is the role of the financial sector in terms of this big transformation, this great transformation that we have embarked on and that is still to quite some extent kind of in front of us. In that respect, what one needs to acknowledge is that by just implementing a sustainable finance strategy, transformation will not happen just because the financial sector thinks that that's a very important thing to do. See, one has to be aware that frameworks and kind of decarbonization pathways, for example, when one wants to look at the climate crisis, need to happen in the real economy. And then the financial sector can be ready to provide required capital to finance this transformation to the extent required, and to find ways to acknowledge sustainability-related risks and opportunities, and and then to inform decision-making in lending decision-making and investment decision-making. So in that respect, financial sector, in my perspective, plays an important role, but not the most important role. And for that to happen, my perspective, and that can be seen from the report as well, that policy coherence needs to play a very important role to basically walk the talk. So when it comes to the government as a whole, having policies and strategies in place that put down the framework for that transition to happen as smoothly as possible.
Okay, so what role does the public sector have to play in the transformation of our economy and society?
Yeah, I just said the starting point was walk the talk, basically. So there's see commitments like the Paris Agreement, like the Sustainable Development Goals that the government made a few years back. So that is the guiding principle that needs to be applied to policy, just in general. And then the public sector has a very important role in role modeling and in moving ahead very coherently with its own delivery of services, maybe the wrong word, but with respect to its own investment policy when it comes to public pension money, for instance, or when it comes to, and you had this topic just in the previous panel, when it comes to the issuance of government bonds, or thinking about, okay, what would be the frameworks for promotional banks or for public sector financial institutions, so to bring this all in line so that every part of the public economy is actually contributing to the extent possible, given rules and regulation and very basic principles, of course, to contribute to those overarching goals.
Okay, thank you, Carsten. So what are the key recommendations with regard to the real economy?
Yeah, here I'd say it's pretty much about the information provided by the non-financial sector, actually. So the Sustainable Finance Committee did huge work on thinking through with very different lenses on what should be done and what could be done reasonably to avoid kind of putting it too much burden on non-financial sector companies. And it boiled down to a few recommendations around kind of scope of reporting, say going a little further than the very large and capital market oriented non-financial companies like it's now. It's about the management report on the business situation of the company, so that non-financial reporting issues are just can be found at just at that one location, and it's not just any location is possible like now. We talked about future orientation being built in and that very report, so to have a bit more of a less looking back, more looking forward, because that's the information investors and the lending institutions actually are looking for. Then there's the big issue of auditing. What purpose is to create additional trust in the figures reported more than now. It's about double materiality, so reporting both on impacts on the company as well as impacts from the company to the outside world, to the environment, for instance. And connected to that is to have more reporting on the actual risk, maybe even with scenario analysis to be seen, being incorporated more coherently in company reporting. So in that sense, that's quite a few, game-changing, I'd say, approaches that eventually will support the financial sector to do its job, i.e., to allocate capital in the most efficient way, taking into account non-financial sustainability opportunities and risks. And I'd like to add that though non-financial sounds like, okay, it's non-financial and it's maybe not material, but I'm convinced that non-financial risks can easily become financial very quickly. Just in many cases, it's not known at what point in time, but that they will is in many cases pretty obvious.
Okay, maybe it's extra financial instead of non-financial, for example.
Yeah, maybe that requires a different terminology. I look very much forward, by the way, to the non-financial reporting directive. So what terminology will be applied and then that update that is forthcoming.
Okay. The proposal of a transformation and impact fund is a very bold and innovative step within the final report. Could you tell us a little bit more about the concept?
Yes, so one has to start with what's the issue at hand here. So I mentioned there's a big transformation going on, and it will go much further. And we find, in particular in the small and medium enterprises segment, that access to capital for the benefit of the transformation and in order to change business models and to make them compatible with transformation might not be optimal right now. So that led to the idea that the committee put forward to establish a transformation impact fund to provide just that, a pot of capital for those companies who want to shift and want to change and to modernize their business models that ultimately will be compatible with the sustainability goals. So in both terms, it's a pretty straightforward and easy concept. that from my perspective is a very good start in terms of what the committee now recommended. Certainly, this needs to be further explored because the devil is in the detail, and then for the details, the committee was not in a place to go much further. But it's kind of a, let me say, it's a first step to move ahead on that end. And then maybe there's other initiatives that go in a similar direction, and then one has to see what makes most sense from a public perspective, because basically it's for the public benefit and for our all benefit.
Okay, thank you. So the final report was submitted to the federal government. So what will be the next steps?
Yes, I alluded to what was the process back in 2018 on the European level with the HLAC and the European Action Plan. Now, so we handed the report over to the federal government just a week ago. Yeah, and what now? So the aim that the federal government came forward with just 2 years ago was to establish a national sustainable finance strategy. And so our recommendations are now, with the government, and it's now up to the government to make best use of our recommendations, of the Beirats of this committee's recommendations. So in order to implement or to take those up for the national strategy by the government. Of course, it's not a given that everything will be taken up. I think one has to be just reasonable. But ideally, all of those recommendations should be taken up. That's clear. So from a committee perspective, that goes without saying.
Okay, so looking a little bit into the glass bowl, I mean, the work of the advisory committee is limited to the current legislative period. Will there be a kind of advisory committee 2.0 after that? What's your personal wish, how we should continue?
Yeah, that's a bit of a crystal ball. You're right with that. So the Sustainable Finance Committee's kind of establishment is for this legislative period, and that is going to end sometime in fall this year. The committee is, as such, still in place and will be in place for the next month. What a new government potentially, and who knows what the government will look like, it will do with the Sustainable Finance Committee is up to the new government. Certainly, me personally, I could imagine the Sustainable Finance Committee to continue its work in an advisory capacity. What I see after that very intense process that put quite some additional burden and effort on committee members in actually drafting and publishing that report. So the actual work and then maybe monitoring of a national sustainable finance strategy, so that I think needs to be done in a slightly different setting. So we will have to think in the months to come what that could look like, and maybe there's something to learn from outside Germany. There's maybe some examples even within Germany in different contexts. So we will look into that, and I find that is quite the most interesting point right now. How to make this a continuing effort. Because what is pretty obvious is that there's good ideas. There's not always solutions already at hand. So there's still quite some way to go, both practically and as well as in academia. So when it comes to research, so there's so many interesting topics that researchers might want to take up.
Okay, thank you very much. So given the time, one final question. So what can we learn from other sustainable finance hubs, and where can Germany maybe be a kind of role model? Very short, given the time.
Yeah, the Sustainable Finance Committee was quite a distinctive body, I think. So there's not too many I see in that respect in other countries. What it really made it distinctive is to have a holistic focus. I think that is very good. When it comes to implementation, yeah, we just look at different models, no? Like in the UK, like in France, like in the Netherlands and in Spain. So and maybe, yeah, putting together all the good things and then trying to avoid mistakes, I think that's the way to go. And of course, it's just some common sense and getting different stakeholders on board, because no one stakeholder alone, no one institution alone can do this. So there needs to be mutual work, mutual understanding, and quite some enthusiasm with everyone. Thanks.
Okay, thank you very much. Time already flies. We are finished. Thank you for the interesting discussion, Carsten. Thank you.
Many thanks for having me, Markus. Goodbye.